have seen, seen that the meeting has already called to order by Jomon sir. So I think I will play the ICAI motto song. Please be seated, everyone.
Yaesha Sukteshu Jagrati
Thank you all. I would now like to welcome our own chairman, C. Praveen Narayan, Chairman, KOLLAM branch, to give the welcome address. Chairman, over to you.
Thank you, THRISSUR. Good evening, all. It's with a tremendous pleasure I invite Honorable Chairman of SIRC, C. Jalapathi, Member and past Chairman of SIRC, our own C. Jomon K. George, Alappuzha Branch Chairman, C. Rajani Shah, Trivandrum Branch Chairman, C. Ramesh Kumar, Kottayam Branch Chairman, C. Prashant Srinivas, THRISSUR Branch Chairman, C. Irene KK, Secretary of KOLLAM Branch, C. Sabu CS, other managing committee members, respected senior members, and dear friends. The mind is not a vessel to be filled, but a fire to be ignited. Again, welcoming each one of you on behalf of the managing committee members of all the 5 branches to this 3-day virtual CPE seminar on accounting standards and update. Even though we used to receive frequent feedbacks, one such feedback from an eminent chartered accountant, C.A. Jacob sir, had set the ball rolling for us to think on conducting a CPE seminar on accounting standards, emphasizing its importance in accounting and auditing, especially in case of corporate clients. On discussing this session with the chairman of other 4 branches, they had shown enthusiasm in working together to impart knowledge to all the members of the branches, stressing on the need that the emphasis should be given to the accounting standards which are more relevant to us. We are, in fact, delighted to have 3 renowned speakers for this program, and this wouldn't have happened without the sincere effort from the side of our CA Jomon sir, who is a true believer of the phrase, gaining knowledge is the first step to wisdom, sharing it is the first step to humanity. When we approached Jomon sir, he had readily accepted the request on conducting a session on accounting standards, and only through his enthusiasm, we were able to manage to get the other 2 sort of speakers, CA Chinnasami Ganesan and CA Gururaj Acharya. We are indeed blessed to have with us our respected SIRC chairman, CA Jalapathi, a man of simplicity and integrity. He is known for his wonderful administration and high achievements of the institution he is in charge of. We had also put forward a humble request to him, which he had readily accepted without any hesitation, that is to officially inaugurate the website of KOLLAM branch. Now, moving on to today's session, CA Jomon sir will be covering the applicability of accounting standards and accounting standards from 1 to 5, 7, and 9. And the next session will be conducted tomorrow from 3 p.m. to 6 p.m. on accounting standards 10, 11, 15, and 26 by Chinnasami Ganesan from Chennai. And the last session will be at the same time handled by CA Gururaj Acharya from Bengaluru, covering accounting standards 16, 18, 22, and 29. Wishing all an insightful seminar. Stay safe, stay healthy, and stay protected. Over to you, sir.
Thank you, sir, for that warm welcome. I would now like to invite CA Aryan KK, Chairman, THRISSUR Branch, to introduce our chief guest for the day. Over to you, Aryan, sir. So you
unmute.
Sorry for that. Yeah. Thank you, sir. Our respected chief guest, SIRC chairman, C.K. Jalapathi, speaker of the day and past SIRC chairman, our ex-official member, C.A. Jomon K. George, chairman of KOLLAM branch, C.A. Praveen Narayan, chairman of Kottayam branch, C.A. Prashant Srinivasan, chairman ALAPPUZHA branch, C.A. Rajnish Sir, chairman of Tirunelveli branch, C.A. Ramesh Kumar Sir, secretary of KOLLAM branch, C.A. Sabu C.S., treasurer of KOLLAM branch, C.A. P. Srinivas, Madam Rema Sharma, other dignitaries, managing committee members of Kottayam, KOLLAM, ALAPPUZHA, Tirunelveli, THRISSUR branches, and other members attending the seminar. A good afternoon to one and all. Thanking other branch officials giving me this opportunity and great privilege to introduce today's chief guest, our SIRC chairman, C.A. Jalapathi K. A brief profile of our chief guest, C.A. Jalapathi, hails from a humble background of family of agriculturists in Kolattur, Salem district. He qualified as chartered accountant in May 2004 and since then practicing at Coimbatore. He has been serving to the Chartered Accountants Professional Fraternity of Coimbatore branch since 2007 in various capacities, and he was the chairman of Coimbatore branch for the year 2012-13. He got elected to the Southern Indian Regional Council of ICAI for 2 terms, 2016-19 and 2019-22. He was instrumental and closely coordinated with the government of Tamil Nadu for signing of Memorandum of Understanding in the year 2018 between ICAI and the government of Tamil Nadu to provide career counseling to students of government schools, which is first of its kind in India. As chairman of the Career Counseling Committee of SIRC of ICAI, conducting in coordination with ICAI and the government of Tamil Nadu to create awareness about the CA course to the students studying in government and government-aided schools covering around 1 lakh students and training over 2,500 teachers. His areas of interest or specializations are: his life is by itself an example for the financially challenged student to aim big and realize the goal to pursue higher levels of education and attain higher levels in life. His mantra for everyone and especially for the aspirants to become chartered accountant is hard work and perseverance to achieve and accomplish in life. With this, let me introduce our chief guest of C.A.K. Jalapathi. Thanks. Over to you, sir.
Thank you, sir. I now welcome the eminent chairman of the SIRC of ICAI, C.A. Jalapathi, to enrich us with his wonderful speech. Please, sir, over to you.
Thank you. Thank you. Thank you so much, sir. Very respected chairman of host branches of SIRC, C.A. Rajnish, C.A. Praveen Narayan, and C.A. Prashant Srinivas, Acharya, and C.A. Ramesh Kumar, other office bearers, and members of managing committee of the respective organizing branches, the resource person of the day and the past chairman of SIRC, my well-wisher, the great strength in this regional council, C.A. Jomon K. George. Under his leadership, I worked as a secretary of SIRC. We did the mega regional conference at Cochin. Still, this conference is many of the members in mind. When next conference like this Cochin conference happen, we don't know. So thank Jomon sir and members of this great profession. Very good afternoon to all of you. I am extremely delighted to take part of this 3-day CPE seminar on accounting standards. I am happy to be associated as a chief guest and inaugurate this program being conducted as a joint effort by 5 of the branches in the state of Kerala. Only a few days back, I had a privilege of participating in joint program organized other 5 branches of Kerala for the students. I look at these initiatives as a step forward to associate at regular intervals as a interstate branch seminars. Nevertheless, there were the occasions when joint interstate seminars were conducted, but I wish these joint programs should be conducted at regular intervals. When I was the chairman of Coimbatore branch, conceived the concept of a joint program with the nearest branches. We also decided the theme for the concept of Panchabhuta branches. So Coimbatore, your own Palakkad branch, and Erode, Tirupur, and Salem branches. Since 2012, we are continuing the concept. Every year, minimum at least one joint program for the members, one for the students. So like this, I wish the Kerala branches also should continue the concept in future. I therefore congratulate the entire team of the organizers for this concept launching a seminar on a subject of significance and interest to our professional fraternity. Accounting standard and update. The organizers richly deserve our congratulations and the compliments. We have a team of 3 experts on accounting standards who have rich and extensive experience in the subject. I am sure this program most enlightening and entertaining. Yes, they have been widely known for our professional fraternity of their acumen, the articulation, and the in-depth knowledge they possess in this subject. In the updates on accounting standard with a particular reference to our financial reporting with due compliance for the year 2021 would give us a broader and comprehensive outlook through their presentations. The accounting standard board was constituted by ICAI with the aim of harmonizing the diverse accounting policies and practices followed, and the board was entrusted with the task of issuing the required accounting standard from time to time. I am happy the organizers have thoughtfully encompassed the 15 accounting standards in this 3-day seminar to give the audience a wide range of standards and updates on the standards with a specific reference to audits for the current year. Forums of this nature not only update and enrich the knowledge of our professional colleagues, but also generate newer insights and the dissemination of thoughts. These insights that the members share will be helpful to the accounting standard board to review, modify, and upgrade the existing standards to match the financial reporting requirements. And may also help the formulating new accounting standards through the process that is robust, comprehensive, and inclusive in our ICA system. One of my recent meeting, I expressed my desire that large number of members should offer their valued suggestions on the exposure draft issued by the accounting standard board. This forum is yet another opportunity for me to exhort our members and renew my request among this August audience too. The concept of financial reporting is a dynamic in nature, and we are witnessing changes in the regularity in presentation of reports from the side of regulators. We should therefore adapt ourselves to such developments that have bearing on our reporting and disclosure requirements. In this good occasion, on behalf of SIRC, I place on record our words of appreciation to our members of Southern Region. Many of the programs are conducted by SIRC and its branches in the evening for the duration of 3 hours. Large number of members are participating, which shows their eagerness to keep themselves abreast on the subject of professional interest. SIRC on its parts making all its efforts to offer our members a feast of knowledge on diverse subjects. In this respect, I should also acknowledge the pivotal role of the branches to conduct continuing professional education program. With the permission of the organizers, take a minute or two to share some of the proactive steps taken by SIRC and seek your continued support to offer our best service to all the times in the cause of our members and students. Friends, throughout the Southern region, most of the branches of SIRC conducted many CSR activities. In addition to the SIRC, in addition to the branches, SIRC also sent appeal to each of the members to contribute to CM Relief Fund. Whatever possible way, kindly contribute. If possible, you can request from your clients also. For our profession, we need a lot of support from the state governments, and we want to improve our state liaison with respect to state governments. For this cause, kindly support for this initiative. Recently, we have conducted the orientation program from SIRC for the branch staff for all 45 branches of SIRC, giving them an overview of branch functions, and its coordination with the SIRC and ICAI, and exerting them to offer the best service to our members and students. The program, I am sure, would further improve our standard of functioning of the branches. Some of the branches not able to organize regarding the coaching classes for all the levels. So we SCRC recently decided to organize regional level online coaching classes to support the branches for the classes and the revenue also sharing among the branches. So this is main concept is for the small and small branches. Students also need not move bigger cities to attend coaching classes. That is the main concept. At the same time, chartered accountants who are practicing in small towns will get the article students from their place. I request every one of you to disseminate the information to needy students. Recently, the first batch foundation for the CA foundation started for the regional level online coaching classes. Based on overwhelming response, next batch we are going to start for the July 15th for the November examination. SIRC is happy that the issues brought before the grievance redressal have been immediately resolved. Also introduce the help desk for each of our SIRC services like CPE programs, coaching classes, and GMCSE and orientation. For each and every initiatives, every services, we have introduced the mobile number for the respective staff. You can contact them through mobile because most of the time the lockdown, all these things happening because of that. Plus, to improve our SIRC service, we have introduced this concept mobile numbers. This is the long pending issues. Every member of the region keep on telling the SIRC is not functioning, they are not attending call. For that purpose, we have introduced on behalf of SIRC, I am requesting members to join as a panelist for offering views on exposure draft brought by ICAI from time to time. Also, I request the members in this good occasion to contribute substantially to CABF. For the CABF, the members are struggling for many. I think the ICAI, recently ICAI, one of the central council shared almost 4 crores plus funds distributed for the CABF for this COVID related cases. I think around 250 members got benefited out of the CABF. ICAI is requesting more funds required to support our own brothers. With these remarks, I have great pleasure to inaugurate this 3-day seminar and wish you all for happy learning. The last but not least, my sincere appreciation to the CA Praveen, Chairman of KOLLAM branch, for his continuous and dedicated follow with me for this excellent program. Also, thank you so much for this great opportunity. And my special thanks to my brother Jomon sir for his follow and his encouragement and motivation, my personal motivation, and more importantly, the guidance to discharge my duty as a chairman of SIRC. I wish Jomon sir for his all his future endeavors. Thank you so much for this once again for the great opportunity.
Thank you, sir, for those kind and encouraging words. Your request has been received loud and clear, and I'm sure it has been received at heart. So the members would do whatever is required of us. I would, before moving into calling upon Rajneesh to introduce the speaker of the day, I would like to request the Chief Guest CA Jalapathi, Chairman of the SIRC, to inaugurate the website of KOLLAM branch, and I would like to invite Jomon sir to preside over the inauguration as an honor for the branch. Please, sir, if you would.
You have the screen spotlight on the screen of the website. Is it possible?
Trivandrum ICAI, can you share the screen of the website?
I think only the desktop has come. If there is something which is arranged as if the chief guest has to click, and then if the website comes up, that'll be nice. Praveen, yeah. All right. Okay. Right. Chief guest can declare it as launched.
So my congratulations and compliments to the KOLLAM branch for this very nice website. Thank you so much for our support for the SIRC. Even SIRC, every chairman is requesting to have website for each and every branch separately and update regularly. My request is update regularly for the website. Thank you so much.
Thank you, sir. Thank you, Jomon sir. Thank you, Jalapathi sir. Thank you very much.
Excuse me, may I interrupt? Jalapathi sir, I would really like to have you on board till the very end, but I remember you saying that you're traveling and you are away from Mettur and Coimbatore. So if
Yes,
you
sir.
have some, please take the liberty of leaving at any time, though
Thank you.
we
Thank
would
you.
like to have you all the time. Thank you so much for the nice
Thank you.
words. Thank you. Right.
Thank you.
Thank you, Chairman SIRC. Thank you, Jomon sir. It was an honor for us to have our website inaugurated at such an August gathering. I would now like to invite CA Rajneesh, Chairman, ALAPPUZHA branch, to introduce the speaker for the day. Rajneesh, over to you, sir.
Thank you, Dilip. Good afternoon, all. It's my privilege to introduce our speaker, CA Jomon Kejo. Actually, there is no need of an introduction to our speaker. But as a part of formality, let me introduce our speaker, CA Jomon Kejo. Fellow member of the Institute of Chartered Accountants of India with 29 years of diversified practice experience. Chairman of SIRC of CA Institute 2019-20. Founder and managing partner of JVR Associates, an 8-partner firm specializing in corporate audits and consultants. Mentor, Philip Me Millen Woods, a multidisciplinary accounting and consulting firm based in Dubai. Faculty for auditing at ICAI, has taught more than 10,000 CA students. Regular resource person on professional circuit on accounting and auditing standards and corporate audit. He done more than 800 presentations. Also a peer review trainer. He was member of Auditing and Assurance Standard Board of ICAI. He was chairman of ICAI Ernakulam for the year 2002-03. Has traveled extensively in UK, Middle East and the Far East. Past president of Rotary Cochin Central and member of various social clubs. Honorable Treasurer of Kerala Management Association. Member Advisory Board, St. Teresa's College, Ernakulam. Thank you, sir.
Thank you, sir, for that introduction. As you have said in the beginning, it's always like that. Jomon sir doesn't require an introduction to our members. He's always welcome here. And I would now like to welcome the Jomon sir to start the technical session for the day. Accounting standards and update. Over to you, sir. And if you require anything, we'll be all at hand and you can just request it here.
Yeah.
Over to you, sir.
Thank you. Good afternoon to all of you. The chairman of the organizing branch, lead branch, I would say, the KOLLAM branch, my very dear friend, Praveen Narayan. The rest in the alphabetic order, Alappuzha branch, Rajneesh, Kottayam branch, Prashant Srinivas, another very dear friend, who had sent a very powerful audio message this morning to the members to join in large numbers. Extremely happy that we have 271 as of now online with us. It's a good turnout. My compliments to all the entire organizing team. The Trivandrum branch, I'm changing the order, Trivandrum branch, Ramesh Kumar. Trichyur branch, Aryan. I have addressed everyone. Yes. And the secretary of the organizing branch, Sabu CS. And very importantly, my very dear friend, a younger brother for me, CA Jalapathi, the honorable chairman of the SIRC of ICAI, with whom I had the privilege of, now we are in the 7th year in the council together. This year he has been elevated as the chairman. As was mentioned in his brief profile, Jalapathi's life story is very inspiring. And it is specifically mentioned that it is so motivating for students who come from financially weak backgrounds. I had taken his permission an earlier occasion also to say that he had to discontinue his studies after his 12th because of certain difficulties. And then he bounced back into the bounced back and resumed his studies and bounced back with added vigor because of support from his family member. And today, donning the highest position in the institute's administration, the southern region, over 68,000 to close 70,000 members, Jalapathi, who has been kind enough today to join us and who delivered a very, very focused, befitting inaugural speech, and also inaugurated, or rather launched, the website, the brand new website of KOLLAM branch. Very senior members who are present with us today, respected senior members. I'm seeing many of the past chairmen of all the 5 branches, Trivandrum, KOLLAM, Alappi, Kottayam, and THRISSUR. And my dear colleagues, extremely delighted to be with you, on screen though, virtual though, for this 3-day empowerment program on accounting standards, which has just been inaugurated, going on tomorrow and day after, covering, as Jalapathi rightly said, 15 important accounting standards which are commonly applied, or rather commonly to be complied with by all of us at our work desk. My sincere compliments to everyone, Praveen and all the other 4 branch chairmen and the team, secretaries, Rema, Sabu, Martin, Prem, and Jean, in the right order from south to north, and on their managing committee team for putting all the elements together. And Dilip also, all the past chairmen of the various branches, Dilip, who is preparing this program and who is today been a wonderful host, I would say, that in organizing or putting all the elements together. So really nice to have this program as we stand at the threshold of the audit season. Now in April, with a lot of difficulties, we completed the bank audit, and then from early April, from early May, the lockdown started and we were all stuck. Now from today onwards, we are slowly bouncing back to normalcy, with lockdowns getting eased in a phased manner. Of course, high TPR rate places. Chairman, SIRC chairman, just discussing what's happening in Kerala. Our lockdown has been partially lifted, we can say, but some of the districts are still under high TPR. So carefully, we are resuming work. Today I was in office. Now I'm addressing from my residence. I came back here. So it's good that we resume in the right spirit, and happy that such a program is taking off today on accounting standards. As I mentioned, audit season is starting. So therefore, some of the listed companies, some larger companies, we have been able to do, but most of the company audits are waiting to be done. In terms of accounting standards, the compliance part is very important. Compliance with accounting standards is an integral part of corporate as well as non-corporate audits. But today, the topic is accounting standards and update with specific reference to company audits of financial year 2021. Today, we are covering the first 7 standards, though it is 1 to 9. 2 of the standards in between have been withdrawn, which we'll discuss as we go by. And tomorrow and day after, the other 8 standards together would be discussed by Mr. Chinnasami Ganesan from Chennai and our friend from Bengaluru, Gururaj Acharya, who have been kind enough to concede and agree to join us. Praveen, myself, we called them and very, very happily agreed to join us. So with this introduction, let me now try to sharing my slide, the presentation with you. So wish you happy learning. In the next close to 2 hours, we have to cover these standards with a detailed introduction of the applicability, because there is some bit of lack of clarity in some places. So with that, let me thank the organizers for making me part of this as a ex officio member of all these 5 branches, for that matter, all the branches in Kerala, a position, a very big privilege you have given me. I'm happy and proud that our inter-branch activities, as the SIRC chairman rightly mentioned, are becoming more collaborative, more inclusive, more participative. Next week, a few days back, Aryan and the team of the northern branches, we had a joint program, and again one is coming up with Calicut, Kannur, and Palakkad joining together on accounting standards, on standards and auditing. Many other branches across the region are doing joint programs. Very happy about it, and once again, my compliments. Is the slide visible full screen?
Yes, sir.
Yes, sir.
Thank you. Is that Rama? Quickly responding. Thank you, Rama. Okay, nice of you. Yeah. So accounting standards for company audits 2021. ICAI KOLLAM lead branch, then in the alphabetic order, Alappi, Kottayam, Thiruvananthapuram, and THRISSUR. Good that our original names have been reinstated by in general and also by the institute. A quick introduction on how we evolved over the years, Accounting Standard Board and its evolution. C.A. Jalapathi, our chairman, the chief guest, did mention about the Accounting Standards Board, which was set up in 1977. We will take only 2 minutes to dwell upon the past and then sequentially arrive at its evolution. 1977, ASB was set up, Accounting Standards Board, and it entrusted with the duty of identifying areas where divergent practices were there in accounting and then to standardize them. Accounting standards are to reduce accounting alternatives. So therefore, and to bring about uniformity in presentation. So it evolved over a period of time, and today we have 29 minus 2 standards as on date. 29 standards, but 2 have been withdrawn, but that it has not been renumbered. So we cannot say 27 standards, we generally say it's 29 minus 2 standards. And there's a clear legal provision. The accounting standards today are integral part of the law book. In the old Companies Act 1956, you know that it was in 1999, after so many years of enactment, 43 years after enacting the Companies Act 1956, that accounting standards got statutory teeth. But when the new Act 2013 replaced 1956 Act, it was made integral part right from the beginning. So that is what we are going to start with. The Companies Act 2013, 2 chapters very important for auditors and finance professionals, accountants and auditors and finance professionals. One is chapter 9, which is about accounts of companies. Section 133 falls in that particular chapter, which categorically states that the central government may prescribe standards of accounting or any addendum thereto as recommended by ICAI, and after examining the recommendations made by NFRA in consultation with the NAFRA. NAFRA is a National Financial Reporting Authority set up under 132. It has already been established. It is gaining strong footing. It started taking action against erring auditors and finance professionals. It's also entrusted with the responsibility of this kind of not formulating, recommending and advising the government on standards which are to be applied in financial reporting. But as of now, NFRA has not started exercising this power. So with that, the accounting standards issued by the ICAI, 29 minus 2 of them, are the applicable regulatory framework as of now. Moving on to jumping out to chapter 10, which is an equally important chapter, that is audit and auditors. Section 139 to section 148. 139 appointment of auditors, 148 is cost audit. So we have both inclusive 10 sections in the chapter 10, in which one of the most important sections for auditors, chartered accountants that we are. I'm seeing some of the corporate accountants as well. Equally important for you, it is 133, that's more important, to comply with standards in the preparation of financial statements. 143 deals with the auditor's responsibility, powers and duties of auditors, and auditing standards. That is the caption of the section. 143 states that the auditor shall report whether, in his opinion, the financial statements comply with accounting standards. So 133 is for the corporate accountant sitting at the other side of the table to ensure that he is preparing financial statements. I didn't mention that. So 133 is empowering the session. In exercise of the powers, the central government has issued this accounting standards rules, and therefore 29 minus 2 are the applicable law. And the auditor would come up to do the audit. And finally, of course, many of us, though we say it is auditor's responsibility, we do it together. Sometimes we help the corporate accountants to even prepare financial statements. But compliance has to be ensured. Helping them doesn't mean that the focus of the audit and the objective of the audit can be diluted. It should not happen. Even our students, when sometimes we ask, has the audit been completed? Sometimes we hear them say that statements have been taken or statements have been drawn up. So that is, of course, we have to help them. But then the focus of the audit, doing all the required examination verifications, and to be able to make assertions on forming an opinion on financial statements can never be diluted or underemphasized. So this is the responsibility of the auditor 143, and that's very, very important that we take note of that. With that, we will move on to the specifics. But before I do that, get into the accounting standards, there's a lot of confusion about what's happening. The accounting standards, there are Ind AS, there's IFRS. Okay, oh yeah, IFRS is not there for the time being. Ind AS refers to the converged version of IFRS, which are made applicable in India for certain large companies and for certain sectors. So in this, while we are going to discuss accounting standards, which we studied and learned and applied, most of us, very few of us have a large Ind AS clients. So Ind AS is applicable only to listed companies, small and big. We have very small listed companies because BSE listed companies at that point of time, in the mid-90s, I remember the threshold limit for capital was only 3 crores. So we have a lot of 5 crore paid up capital companies were listed on the BSE. But with NSE coming in, the situation changed. And now we have 20 crores is a threshold limit for NSE. They're very small listed companies in Kerala, but it's whether it's large or big, large or small, it is listed companies, all of them Ind AS are as applicable. Unlisted companies with net worth of 250 crores or more, yes, that's for them, it is applicable. Holding subsidiary, joint venture, associate of the above. Our company could be a small private limited company sitting in Trivandrum, Koilon, Alappi, Kottayam, THRISSUR, Cochin. But then if that happens to be a subsidiary, a joint venture associate of a larger company, let's say in Chennai or Bengaluru or Mumbai, then even if we are small, by virtue of our parent being big and also holding company, we could be a holding company of a larger company. We are an investment company, small company, but we are holding majority shares in a large company with net worth of unlisted company with net worth of 250 crore or more. Even then, Ind AS would apply. And lastly, NBFCs, non-banking finance companies, have also been, Ind AS have been made applicable for all the NBFCs, irrespective of size. Last time when I presented this as SIRC, there was a question, sir, it's a small NBFC, is it capital thresholds are applicable, all those things? Then I said, no, irrespective of size for all NBFCs, Ind AS is applicable. So what does this mean? This means that for all unlisted companies, except NBFCs, with net worth of less than 250 crores, accounting standards are applicable. These are the accounting standards which we are going to discuss one by one after an introduction. The first 7 standards we hope to cover in the next 1.5 hours or so. Applicability of accounting standards. Let me start with the CASR impact. This is starting point. We have today, when we address programs, I'm being extremely cautious of the fact that we have newly qualified members who are joining the league. Some of them, of course, they have recently studied all this. We have members who have probably taken a VRS, or some of them have left the employment, some of them have lost employment, come back from abroad, particularly in the Middle East, and trying to set up a practice. Therefore, these basics, even if we take 5 to 10 minutes on establishing these basics and making sure that our understanding is right, that I think it will make huge sense for those brethren who are relatively new to this. Of course, for every one of us, respective of the age and experience, this could also be seen as a recap or probably a revision on what we have learned, or something which new insights with that we can brush up what is to be done as we embark on this upcoming audit season. The emergence of the concept of small and medium companies, and non-applicability of certain accounting standards to them. So when the company's accounting standards rules was enacted in 2006, then what happened was made this categorization of reporting enterprises. Why should very small companies or even medium-sized companies be asked to undergo the trouble of complying with those technically complicated standards? For example, AS 22, taxes on income. Yes, AS 17, segment reporting. Do we have to stretch accounting standards compliance to that extent? It was felt in good taste, it was felt that it should not be. Therefore, they made this categorization of small and medium companies. Let's see which are the rules which one should refer to. So 133 of the new act, 143 of the new act making mandatory for the auditor to report on, 133 for the corporate accountant, and then all the accounting standards which are the latest revised versions you should take downloads from the ministry's website or institute's website, and then companies accounting standards rules 2006, which was a starting point, amended after 10 years, made major amendments in 2016. The standard on depreciation, one example, the second bullet point of 16 amendment, the standard on depreciation AS6 has been fully withdrawn and blended with accounting standard 10, accounting for fixed assets, which has been renamed as property, plant, and equipment. So these are changes which we'll see as we go by. We'll touch upon all those standards. I don't think we are touching AS10 today because that has been assigned to Mr. Chinnasami Ganesan. AS10, property, plant, and equipment, and AS26 also, intangible assets, that he will be dealing in detail tomorrow. And I'm sure that his expertise would throw a lot of light on if there are gray areas, there are contentious issues, which will all be addressed eminently, very efficiently by Mr. Chinnasami Ganesan, who has been very supportive for me also as SIRC chairman. He traveled across the region. That time we could travel. We had a lot of physical programs. He supported. So is the case with Gururaj also, Gururaj Acharya. I call him Guru, Raja, and Acharya. And the son and my daughter, to strike a personal chord, they were classmates in St. Joseph's College, Bengaluru. Last year they graduated. And so therefore very close to and very willing to come to Kerala and Kerala branches. So that is up to, I was just taking a detour from the AS10, which I mentioned about. Well, now let's see what the definition of a small and medium company. A small and medium company is a company which meets all the following conditions. Cumulatively, they should follow the conditions. Its equity and debt securities are not listed or proposed to be listed in India or abroad. Listed, we know, proposed to be listed is that if the company has passed a board resolution, started appointing merchant bankers, there's a lot of spade work which these companies have to do when you plan an IPO. It takes about 7 to 8 months to get really ready. And I've been fortunate to be the consultant for 2 of the IPOs in Kerala. One is a small company from Pala, Kottayam. I belong to Pala, and therefore I always say that Kottayam is the original home branch, but I'm working and living in at Ernakulam and part of the Ernakulam branch. And then that was in 2006 and 2008, the VGuard IPO. VGuard IPO, the issue price was 82 rupees at that time, the strike price. And then it went up to 2,600. And after the split, I think today it's bordering around 230 or so. So therefore, that has become multi-bagger, making Kerala very, very proud in the secondary market space. And so these 2 IPOs I was fortunate to be the consultant of. And so proposed to be listed would mean that, okay, they have started doing this paid work, past a board resolution, etc. etc. In that case also, it goes outside the definition of a small and medium company. It is not a bank, financial institution, or insurance company. Its turnover does not exceed 50 crores in the previous year. So for audits of 2021, we should look at the turnover of 1920 financial year. Its borrowing does not exceed 10 crores at any time during the previous year. Yes, again, previous year. At any time during the year. You would have had a loan, you would have closed a loan on April 3rd, 3rd of April 2019. Even then, you had 3 days of outstanding. So this would be, really doesn't make sense that way. But then that's to say that it is not important to have the closing outstanding balance of 10 crores. So at any point of time, 10 crores, yes, you are a non-SMC. This is SMC. And lastly, the residuary clause that this company is not a holding or subsidiary of a non-SMC. Non-SMC is a large company, but then they have used the term SMC and non-SMC, non-SMC. So this is the definition of a small company. Now, what about the applicability? The applicability is like if you are not an SMC or if you are a non-SMC, the rule, the cardinal principle, the rule is very clear and easy. All the accounting standards, all the 29 minus 2 standards would apply in toto, in entirety to non-SMC. So there is no exemption, no relaxation as far as the applicability of accounting standards are concerned. This is the key point which one should really keep in mind. Okay. Now that is a point. Now coming to this, I have made it in a chart form. I would be only happy to share the slides if somebody is noting down, well and good. Otherwise, I'd be only happy to share these slides with you, with all the 5 branches, so that it can be either put on the website of the branch, disseminated to the members based on, as we give the CPE credit for the program. After the program, probably we'll request Chinnasami and Gururaj to share their slides as well. That would become a complete hopefully a complete picture and about the applicability and the specifics and nitty-gritties of all these 15 very commonly applied applicable standards. Standard 1, let us do a recap also, run through or rather bulldoze through all these standards. I have taken the new other standards also for the sake of understanding the applicability. Praveen, you are there? Rama, is it going okay? Am I audible, clear?
Yes, sir. It is going good, sir. No issues.
Thank you. Thank you so much. Accounting Standard 1 deals with disclosure of accounting policies applicable across the board, whether you're large, big, small, non-SMC, no, absolutely no differentiations applicable for all companies, all types of companies. Now we are talking about companies. Let me take a detour. I just finished preparing a presentation, a comprehensive presentation on the applicability of accounting standards to non-corporate entities. Now the key question, let me take a short break in the sense that, again, a deviation from companies, non-corporate audit. So do we look at compliance with accounting standards in tax audits or in the audit of charitable institutions, which is today so much under the lens, we are not able to do the renewal, etc. Every 5 years, we have to do the registration. 12A and ATG are not going to be given for life. They're going to be renewed, and the database is going to be very strong. Database is going to be built. More of stringent supervision going to be under the lens. Activities, non-commercial activities, colored money, all that is going to be monitored. So even if, for example, it's a charitable trust or like the Chinmaya mission, which is engaged in a lot of educational and activities, schools, colleges, all of them. So there again, applicability of accounting standards are there. And whenever there's a tax audit, in the case of business entities also, accounting standards are applicable. That is a strong view which is upheld and repeatedly echoed by the council. And very recently, in March 2021, in the, I think it's a 400th meeting of the council, that they made a fresh list of applicability to non-corporate entities. And level 1, level 2, level 3, level 4 entities, they have aligned with the MSME, new MSME thresholds, 2 crore, 10 crore, 50 crore in terms of this thing. And then that classification of MSME, I'm quickly not able to recall, but that article which I made will surely soon reach you. But before that, if you need, refer the latest journal of the institute. It carries a complete detailed listing of applicability of accounting standards to non-corporate entities. And maybe next week or so, I have requested Ranjit that we should have a program on that to members. That is something which would be useful in the discharge of our tax audits and audit of commercially or other organizations, charitable or not, engaged in commercial activities. Even in cooperative audits, they are applicable. And therefore, now coming back to company audit, which is our focus area today, AS2, valuation of inventories. Inventory valuation, very important standard. Some changes have happened, and therefore that's also applicable. Cash flow statements, AS3. Now we go outside the company's accounting standards rules, because we will see as we go by the new definition of financial statements. The inclusive definition of financial statements under the Companies Act, Section 2, subsection 40, includes cash flow statements also. But there are certain exceptions we will see. Not applicable for small companies as defined under the Act, not SMC classification. Also for OPCs and dormant companies. Contingencies and events occurring after the balance sheet date. The standard has been thoroughly revised, but not renamed. But for quick reference and understanding of the members, I have struck through contingencies, and because contingencies are today found in AS 29, provisions, contingent liabilities, and contingent assets, and not here. So here, this standard 4 now deals with events occurring after the balance sheet date only. AS 5, net profit loss for the period, prior period items, changes in accounting policies. Though the caption is only this much, the standard deals with 2 more items. Changes in accounting estimates, useful life of an asset, certain provisions that would make, actuarial assumptions, all those things, that's accounting estimates. Then deals with extraordinary items as well. In fact, there are 5 items, as the number is AS 5 items. So that is broadly applicable across the board. Depreciation standard has been withdrawn. I did mention that 2016 amendment, Companies Accounting Standards Rules, Amendment Rules 2016, withdrew the standard on depreciation AS 6 and blended it with AS 10. Today, the provisions relating to depreciation, what to depreciate, to what extent to depreciate, how to depreciate, all those things are given, found in paragraph 40 to 60 of AS 10, property, plant and equipment. With that, property, plant and equipment becomes a comprehensive standard with recognition, measurement, disclosure principles of assets, as well as the methods and methodologies, modalities of charging depreciation over a period of time. Construction contracts AS 7, something to be discussed as we go by standard specific when we get into. Yes, they're applicable to all kinds of companies, small and medium, everywhere. Accounting for research and development, withdrawn long back, I think it's 2003. And all the R&D provisions are again merged into AS 26, which is accounting standard 26, which is the intangible assets. So outlay on R&D, how to deal with is mentioned in there. 9, revenue recognition. Yes, we are going to discuss that. So these are the standards which we are going to discuss today in detail. But for the sake of understanding the applicability, I have extended this presentation as 2 more tables to understand the applicability of these other standards as well. AS 10, property, plant and equipment. Yes. Foreign exchange 11. Yes. Government grants 12. Yes. 13, accounting for investments. Yes. Accounting for amalgamations, even if in the smaller spaces. Today, consolidations are happening. We do assignments to smaller companies who are aspiring to grow, or then come together, 2 or 3 companies getting amalgamated, becoming a bigger entity, getting some private equity, venture capital investment, and then handholding these guys, handholding them to reach a IPO and so on. So that kind of value propositions are happening. So therefore, even the smaller space of SMCs, if amalgamation, employee benefits, it's a standard which is a lot of common mistakes are there, but I'm not touching upon that. It's for the tomorrow speaker to touch upon that. Here they are applicable, but they are given this benefit of termination benefits falling due after 12 months need not be accounted on discounted basis. That kind of discounting is not required for employee benefits and termination benefits. When you talk about termination benefits, one should be clear that is defined contribution plans, no major issue, but it comes to defined benefit plans like gratuity, leave encashment, yes, that would apply. And therefore, for them, they don't have to apply for the discounting method. They don't have to discount. On a rational basis, they can do the valuation, or rather determine the liability, accruing liability, which is falling after 12 months. 16, borrowing costs. Yes, that is new generation standards. Up to 15 by the old standards. Then we have 15 borrowing costs. Segment reporting 17, not applicable to SMCs. So now 18, related party disclosures, yes, applicable for everyone. A small private limited company giving a remuneration of 1 lakh per month to a managing director, or sharing expense with another associate company or related party to the extent of 20,000-30,000 rupees a month, yes, that also requires disclosure, related party disclosures. Now here, let me take a pause here, and I hope you are aligned with the presentation. We defined the applicability of accounting standards, which was first determined in 2006. And now then with that, we have a category of the companies are broadly classified into SMCs and non-SMCs and non-SMCs. So for SMCs, we are looking at the chart to what extent are these 29-2 standards applicable to SMCs. This is a common doubt which we have. So this chart, if we keep it as a reference material, not because it's prepared by me, it is just an extract of what the institute has told us, not the institute really, what the MC has told us through the accounting standards rules, that I've tried to make it simpler for the understanding, and that is how we're going ahead with it. I hope the position is clear. So before I go on to that AS 18 related party disclosures, there are a lot of issues which are happening today. One is we give a listing of this, but then in the related party, in the auditor's report, where we have to report on related party transactions in the CARO, some of us leave it out. Of course, if there are prejudicial to the interest of the company, 188 compliance and so on, that is left out. We would probably mention it here, may forget to include in Form 3CD under that 48 2B clause. One has to be extremely careful. And if you, there's also standard on auditing, specific standard on auditing. There are large number of related party transactions. Yes, then SA 550 comes to our help. Standards on auditing 550 comes to our help, which also requires the auditor to get a separate letter of representation. In addition to the letter of representation, we take under section under SA 580, written representation, separate letter of representation for related party disclosures, related party transactions from the management. But we take it a combined one in SA 580, listing that all has been done. Also make sure that 189 register is maintained. If it is not maintained, probably whether we need to really look at it and then go to the extent of qualifying the report and all that, one has to really see. No specific reporting requirement as far as 189 register is concerned. But if there is a register and if it's exhaustive, it is updated, then it is another comfort that the auditor gets from the declarations made by the management. These are the related party transactions, these are the closing balances and so on when it comes to verifying the presentation in the notes on accounts on ASIT. Moving on, 19 is leases. Yes, subject to an asterisk, terms and conditions apply. Paragraph, I've listed all those paragraphs. It says that in the case of the leases, the additional disclosures about operating and finance leases, certain additional disclosures are there. In detail, we have to discuss, but it is outside my topic. So therefore, probably that will be discussed tomorrow. And those additional disclosures, operating and finance lease, you know, the difference is very clear. The standard IS 19 deals with operating leases, finance leases, then sale and leaseback transactions and so on. Accounting by the lessor, accounting by the lessee, and so on. That is what the content of the standard. Earnings per share, yes, 20 is a standard applicable for everyone, but SMCs are exempted from calculating and disclosing diluted earnings per share. Assuming that you have dilutive instruments like convertible preference shares or convertible debentures, whatever is likely to be converted into equity, are sitting in the balance sheet, and they are said to be dilutive. It can be anti-dilutive as well, depending on the changes that would happen to the numerator and the denominator. But again, the key point here, or the simple point here to understand, is that diluted earnings per share need not be disclosed. But then what about basic earnings per share? On the face of the P&L, below all the items are under the box probably that will prepare all line items, basic earnings per share. And how that has been determined, how the numerator has been calculated, how the denominator has been calculated, has to be given in the notes on accounts. These are things which are missing in many of the presentations which are doing today. So the key point, I think the takeaway today, as of late, I have started asking the members, with due respect to seniority or involvement, started asking the members that, are we attending programs and are we making improvements, or like, and making changes, or are we continuing with the age-old practice? Because we have a notes on accounts to a companies which has been there for 20 years. So the student is asked to take a copy of it, just change the year. Are we sufficiently disclosing all those things? We'll see as we go by when we get to do the specific standards AS1. CFS, consolidated financial statements, if there is a chain holding or chain or subsidiary, etc., yes, that's applicable. Accounting for taxes on income, 22, yes, no exemptions. But today, I think that AS22 concept of deferred taxation has well settled into our system today, and that thing. And AS23 is accounting for investments in associates in consolidated financial statements, not applicable. 24, discontinuing operations. One has to very closely look at it, because going concern is today a big concern. This has been discussed in various forums today. But let me take again a very interesting detour from here. I know some of you have heard about this term called revenge spending. I don't know whether you have read this. It is quite there on in the social media as well as in print media. This is circulating. So when the auditor says that, hey, look here, your business has been down 1.5 months, there has been no business. Or for example, in tourism or the aviation or entertainment industry, all of us today would like to, if possible, today evening would like to go for a movie, isn't it? If the malls are open. All of us would really like to travel. Dilip for sure, I know Dilip for sure, I think his bike is started, or he'll just kickstart and go, and he goes to the Himalayas and all that, biking across the country. So all of us want to really set ourselves free. So the tourism industry are the people sitting at the other side. The management says that, yes, we were blocked for 1.5 months. So what? Now we are going to see the entire world, entire population. I hope you have also seen the crowd at the Roland Garros for the French Open finals. The finals where after going 2 sets down, Novak came back and defeated Stefanos Stitipas, a name it's very stylish, very difficult to pronounce. A very wonderful game. We all watched that late into the night. The crowd, the stands were almost full. But the other day, the Portugal-Hungary, which was played in Budapest, the kind of crowd, so Europe is kind of back to normal. Dubai, we are closely interacting with our friends, things are normal. So one things normalizes, tourism industry saying that, okay, 1.5 months, the troubles that I had in the past would essentially be made up. So that is just relevant to talking about, that's been technically now termed as revenge spending. So if you Google up, I'm sure that you'll get a lot of information. So this is a counter argument. I feel sometimes it's sensible. It makes sense to say that, yes, wait for 1 or 2 months, don't write us off. Do you mean to say that as the auditor or as a big advocate of going concern, are you coming and telling us that you are dead and gone? You're finished. No, wait, please allow us to breathe. We are on ventilator. We were on ventilator. Now we're back to ICU. Tomorrow I'll be back to the room. Day after tomorrow I'll be out and I'll be up and running. So this is something which one has to keep in mind. But with due this thing, I have last slide. My last slide would probably contradict a bit from what I said, but that management's sensible views should also be heard. Of course, taken with a pinch of salt, as we call it as professional skepticism. So 24, yes. 25, interim financial reporting, or Q1, Q2, Q3 reporting by large companies, not for SMCs. Intangible assets, yes, AS26. AS26, intangible assets, very clear. The cardinal principle there is that the useful life of an intangible asset will not normally exceed, it's a presumption, rebuttable presumption, that will not exceed 10 years. So normally under SLM, intangible assets are written off for a period of 10 years. If it is computer software, very important to understand, if it's computer software and web design charges, etc., it's not 10, it's 5 years over which we have to write off. Okay. Financial reporting of interest in joint ventures, no. 28, impairment of assets, yes, a technical standard impairment. Provisions, contingent liabilities and contingent assets, yes. 2 asterisk marks there. 4, let's understand. Option to measure value in use on a reasonable estimate basis without discounting. Okay, now what is the value in use is the intrinsic value of the asset. They say that what is impairment? Technically speaking, impairment is if the intrinsic value, the revenue earning capacity or the productive capacity of your revenue earning capacity, that's the better term to use, of a particular asset or a group of assets in an integrated plant, the intrinsic value falls short of the carrying amount or the book value, as we call it. The difference is said to be the impairment, which has to be written off. In addition to the depreciation, you would have charged over 3 years. 4th year, you're seeing that, okay, there is excess installed capacity. This kind of production is not going to be achieved, or this machinery has become a little bit like human beings, a little bit impaired in terms of its productive capability. Therefore, impairment is a difference between the value in use or the excess value, excess of the carrying amount over value in use. So value in use, we normally calculate using discounted cash flow method, etc. Here, small companies are given internal assessment. They can probably document it and the auditor can also rely on that. That is a relaxation given there. And AS 29, paragraph 66 and 67 dealing with, there's a tabulation they are contemplating or rather prescribing in that, opening, outstanding of the provisions, then additional provisions made, provisions paid out or settled, and closing balance. That kind of a tabulation. Many of us are not doing it, but that is mandatory. But for small and medium companies, they are relieved of that kind of a requirement. So this depicts, this is depicted all the 29 minus 2 standards, 27 standards, and their applicability. So before I go standard specific, let me recap again for understanding. Yes, we have 29 minus 2 standards. As far as companies are concerned, the applicability of standards depends on whether you are an SMC or not. If you are a non-SMC, big company, easy to remember, all standards, no relaxations, partial, full action, nothing, all the standards in entirety, in toto would apply to this companies, large companies. SMCs, this chart with the asterisk notes expanded under these 4 slides, I think so, would tell us, I think this could be a good reference point. It could be given, shared to our students. So that would make sure that we do not waste time on what is not applicable. And we do focus on what is really applicable, because today we are under the lens than ever before. the trust we had with or rather the faith the system had in the profession at some point of time has faded a little bit. Some dent has happened, maybe some mishaps. So whether it's a PMO or the finance ministry, yes, we are finding it difficult to get the profession's point through, and representations are not fully heard, because today there's a lot of complaints which they feel that compliance has to be trust-based and system-based. That is why tax audit limits are getting enhanced. GST is disappearing. Smaller branches of banks, nationalized banks, would be go out of audit, because if you do when you do the studies show that recent reports say that new generation banks, which are more efficient, are of course some of them like S-Bank issues are there, but whether it's HDFC Bank or such good banks, the percentage of branches which are audited physically by an external auditor is less than 3%. So nationalized banks are going their way, using more of technology, more of surveillance, more of powers at the zonal or the regional office. So that's going out. So compliance practices today slowly, little bit fading, unfortunately to say, particularly for members in smaller towns like the 5 branches we are together, including Ernakulam, of course. We are being a bigger city, though we say that geography is history and all that. Of course, smaller places have a lot of, so GST audit, trader clients, all of them, there are concerns. So one should get into real newer areas, form partnerships, a lot of things which we have to talk about probably in another platform, or probably towards the end, if time permits, we will surely develop on that also in about 5 to 10 minutes. And I would be happy to have some of the questions or concerns raised so that it could be presented in a forum as your voice. With this, let me now move on to the specifics of the standards. 1, 2, 3, 4, 5, 6 is not there, 7, yes, 8 is not there, 9. AS1, something which we started with accounting standard, disclosure of accounting policies. I was just having a glance through the participants' names, and I think mostly Kerala names only. So I always say that this reminds me of one Mammootty movie, Nayam Vyaktamakkunnu. So one Malayalam movie where Mammootty is a politician, and Shanti Krishna, an actress whom I like a lot, very good actress, and she's the heroine in that. So Nayam Vyaktamakkunnu. So the disclosure of accounting policies, accounting Nayangal Vyaktamakkunnu. What are accounting policies? Accounting policies is Praveen's chosen course of action in Kollam or Prashant's chosen course of action in Kottayam for selecting and adopting certain accounting methods and principles in the preparation of a set of financial statements. The policies can be different. Praveen would go for SLM, Prashant would go for written down value method because it's more rational. Then we always say that, the charge of depreciation and the charge of repairs and maintenance or a period of useful life should even out. There are a lot of stories. So inventory valuation, a lot of this thing is there. So inventory valuation, I would like to go for FIFO, rather than probably Ramesh would say that why FIFO, sir? FIFO is very simple. The best thing is weighted average cost method and so on. So it could differ. So accounting standards would mean that, we have to reduce the accounting alternatives. Doesn't mean that everyone has got, there is a fit-all kind set of standards across the globe. No, different standards. We have US gaps in the US, IFRs in so many territories. Other standards like our accounting standards, they are called third country gaps. Third country gaps, GAAPs, generally accepted accounting principles. In lighter vein, sometimes referred to as games accountants always play. Okay, now let me come to the specifics of the standard. Very simple, says all significant accounting policies. Here, significant refers to materiality. All significant accounting policies should be disclosed, preferably in one place as an integral part of financial statement. So in the notes on accounts, after giving the background, then we start with this main heading that the significant accounting policies adopted by the company are 1, 2, 3, 4, 5. How many? Maybe today what we are giving is very sketchy. I'm coming to that. It should be a complete exhaustive list of accounting policies. And let's also understand the subtle distinction between accounting policies and certain other things which we would say. Debtors, balances of debtors and creditors are subject to confirmation by reconciliation. It's not an accounting policy. It's a statement which gives a warning to the reader, the user, the stakeholder that yes, all of these have not been confirmed and reconciled. And the auditor would probably qualify that. That's not an accounting policy. Accounting policy, I'll come to that, examples we'll give as we go on. Should be part of this thing. And any change in an accounting policy also, any change in an accounting policy should also be disclosed. For example, now Praveen is aligning with Prashant saying that, okay, let me also change over to return on value. And it cannot be a fancy thing or at your whims and fancies. There should be very clear reasons. There are 5 situations or where a change in an accounting policy is allowed or recommended. I'll come to that a little later. When we come to AS5, I will discuss that. We will discuss that. So any change which has an effect in the current period or the future period should be disclosed, mentioned, quantified in all those years where there is an impact on the financial statements. That is point number 2. And accounting assumptions need not be mentioned. Accounting policies and assumptions are different. Assumptions are accrual, going concern, consistency. Accrual and consistency we are fine with, but going concern, yes, it's a concern today. Whatever we talk about revenge spending and things like that, certain sectors, certain businesses, certain entity-specific issues are there. They may find it difficult to pull on into the foreseeable future. That is the technical term they have used. And therefore, one should be clear about whether going concern is a safe assumption or not. But if it's in place, if going concern is not at stake, yes, fine, you can have this as part of your, it's an accounting assumption, you need not mention. But I've seen many of the notes on accounts, people say that the financial statements have been prepared under double entry system on accrual basis and on going concern basis under statistical cost accounting, etc. Accrual is mandatory under the Companies Act. As a company, you don't have to mention. If it is not followed, only you have to mention. Accrual is an accounting assumption as well. If you look at section 128, Books of Accounts. Books of Accounts 128. Again, chapter 9. Those who are new, those who have, as I mentioned, those of our brethren who are relatively new to company audits and all that, please take time off. Reduce your screen time or WhatsApp time and read for 1 hour, 128 to 138. Again, 11 sections, both included. Chapter 9, dealing with accounts of companies. Their accrual is mandatory. Accrual is mandatory. Therefore, they need not be mentioned. So, accrual, going concern, consistency, unless they are not in place, no mention required. And what are the issues we see in the disclosure of accounting policies? This I have drawn from the findings of the FRRB, Financial Reporting Review Board, which is the name of the institute. We have so many boards today: FRRB, QRB, Quality Review Board for tax audits, FRRB for corporate audits, listed companies and large unlisted entities. Slowly they will percolate down to our clients also, small companies as well. FRRB findings are very, very disturbing. Okay. And there we also talk about the FRRB findings, QRB, then we have the peer review. Peer reviews, I would like every one of you to get a peer review done of your firm. We wanted to get it done 2 years back and the process took some time. Not a very in-depth evaluation was done. Personally, I'm striking this note. But we answered all the questions. We were as transparent as possible. And we got the peer review certificate of firm, which is prominently displayed in the waiting area where the clients come and wait, waiting area of our firm. Because these are small kinds of brandings without, going around and saying that, okay, we cannot, we have our ethical compulsions on publicizing or advertising our work, but a lot of relaxations under the new code of ethics. But then even with that, in our office, say that peer review. And we also send a mail to all our clients with this photograph of the peer review certificate saying that we have been recognized. The caption of the mail, subject of the mail was, we have been recognized. The processes and policies are mature enough. Compliance with standards, governance standards and compliance standards are good. So institute is recognized. And many of the clients replied, happy to associate with you. So these are small kinds of brandings which we should consciously do to compete with larger firms who are making, a foray into our areas, even smaller clients. We have the experience of the big four. I'm not anti-big four, nothing against them, but they are quoting much below what we are quoting in certain assignments to get a headway. And then after that, they slowly scale up the fees. And, there are unfortunately unhealthy practices in there. So how do we reach about this? That brand a little more, package a little better, all those things. Of course, deliverables have to be there. Domain knowledge has to be there. But if it sits inside here, it doesn't help. You have to really be vocal about it and make it as visible as possible within the ethical framework. That's what every one of us should do. So back on to the subject, yes, FRRB findings, we are talking about FRRB, QRRB, QRB, peer review, and so on. And here coming back to the FRRB findings, it says that about 70% of the cases they have examined, there have been major deviations, non-compliance with accounting standards. So here the accounting policies, AS1, the finding is very poor disclosures. Poor disclosures in the sense that are very generic. One pager, it's a one page, sketchy one pager, because that has been there from ages together. What prevents us from, I'm not getting instructional here, please, but my tone changes. Praveen, Rajnish introduced me as one has been teaching for 20 years. So there's a teacher in me. I always say, a chartered accountant by profession, but a teacher by passion. And therefore, that's very important. So what prevents us from Googling up and taking a good lot of financial statements, interestingly, some of our students, and framing a good set of notes on accounts, which is kind of exhaustive. But today in the listed space, when we're doing this, the listed space, all the companies are under Ind AS. It's a complete different set altogether. But unlisted companies, of course. But if one-to-one, I can tell you, we are about, I think we have hit 300 now, 302. Congrats, Praveen and team. So triple century have hit, thanks to the good participation, and thank you members for turning in large numbers. The topical importance, and as Dilip said, Jalapathi said, keen learning on an afternoon like this, it's quite encouraging for all of us. We feel rewarded, enriched, and so let's continue to share continue to do the knowledge dissemination, as I call it. Now, the sketchy one pager has to stop. All these disclosures have to happen, and the SMC aspect is missing. What is the SMC aspect? The company's accounting standards rules say, and we saw that detailed chart of these 27 standards. If you are an SMC and you're not, so for example, AS 17 is not applicable to you, so therefore the certain standards are not fully applicable to you, AS 25 is not applicable to you, etc., etc. So you should say that in the notes on accounts, you should say that the company is a small and medium company as defined under the company's accounting standards rules 2006, and hence complied with accounting standards to the extent applicable to SMCs only. This note is very important. The same note has to be required in non-corporate audits as well. When I come to that particular publication I'm talking about, which hopefully, or this particular article, I would say, not publication, hopefully see the light of the day in a couple of days from now, which will be circular. I hope to send a mass mail to every one of you. There also it says that you should say that the company is a level 1 entity or level 2, level 1, no, level 1 fully applicable. A company is a, let's say, level 3 entity, and therefore complied with standards applicable to that level of non-corporate enterprises only, entities only. Now, moving on here, the common mistakes which are highlighted in disclosure of accounting policies is that there is no mention about employee benefits. The company has about 60, 70 employees who have been working for a long time. There is an accrued liability of gratuity. If there's leave encashment at the time of superannuation, yes, all that has been there. But periodically it has not been provided for. You have to take an accounting hit and provide for it. So, but then the policy employee benefits are to be very clearly mentioned. For example, provision for gratuity is made on the basis of actuarial valuation, which is mandatory under AS 15. Though it is session topic tomorrow, actuarial valuation is mandatory. Even if you are a company with 25, 30 employees, even if there is only contractual commitment, not legal or provision of payment of gratuity act applicability, even if there are contractual this thing, you have to do an actuarial valuation. This has to be clearly mentioned in the notes on accounts because it speaks about your NIAMs, your policies, accounting policies. So you have to rectamakify your NIAMs. That's as we call it. So that's very important. Borrowing costs. If you are a trader, for example, having only working capital loan, we would say that all the borrowing costs are expensed in the absence of outlay on qualifying assets. Earnings per share, not mentioned at all on the face of the P&L, no calculations. This is not my version of the story. Don't think that I'm doing fault finding. This is fact finding by the FRRB. I'm just presenting it before you. But introspection once in a while, critical introspection is always good. And we have all done that during lockdowns. New lessons. Deferred taxation, AS 22. For example, what's the treatment of deferred tax asset? Do you recognize deferred tax asset just like that? If you recognize deferred tax asset, one advantage is your accumulated loss may reduce a little bit and your deferred tax asset will increase. What about deferred tax asset represented by unabsorbed depreciation and unabsorbed losses, which are eligible to be carried forward, provided your return is filed on time? Return filing on time is a big question now. So I had this morning shared with all the 9 branch chairmen that we could have a meeting at the branch level, collate the findings, and ministry has already invited suggestions. But we are making loud noise over social media messages, funny messages, critical messages. But I think we should reach 22nd. I think the finance ministry has scheduled a meeting with Infosys, the developer, and hopefully things would improve. And naturally there will be extension. Though I'm not a great advocate of extension today, this time around for charitable registration, all those things. Somebody was asking even for the advance tax payment, the date is already over. But everyone is crying for that. Okay. So deferred taxation, yes. This policy has to be very mentioned. Deferred tax recognition, rate at which is recognized, futuristic rates, substantially enacted rates, a lot of things not mentioned at all. Impairment of assets, if impairment has happened, whether the assets have been put to test. Let me also say that this is equally applicable for C&AG audits. Government companies are of a different genre, but when it comes to accounting standards, they are applicable. And we also see that after our audit is done, the C&AG audit, when they come, they have a lot of findings about non-compliance accounting standards. Because for them, they can start with the balance sheet. But where do we start? There's a signed balance sheet for them to start with. Where do we start with? Dilip is laughing loud. Thank God it is on mute. Where do we start with? Books of account, closing entries, trial balance, preparation of P&L, preparation of balance sheet, cash flow if applicable, preparation of the auditor's report, preparation of the director's report, including reply to auditor's observations. Now, even then, today the regulator is so strict. We had in Central Travancore, there was very, very small 2 companies were audited. And it is because some group companies, a bigger group companies, there was an issue. The SFIO sent a notice to this audit firm. We had a discussion on this. And the first question which SFIO asks is, please provide proof that you have done the audit of these 2 private limited companies fully in compliance with auditing standards issued by ICAI. So if I come to, sometimes we used to come to KOLLAM for a presentation on standards and auditing, we would hardly have 10 people. Some would come late, some would come early and leave, sign and leave. So what we normally used to do at that point of time was that we will plan this presentation on standards and auditing between income tax and GST. So you have no escape but sit in between and listen. But today things are changing. It is part of the statute book. One has to be extremely careful. Standards and auditing also. I did mention about 143. 143.9 says every auditor, not every company, not every director, not every manager, every auditor shall comply with auditing standards. Very easy to read, but then very difficult to comply. But we have to. A cultural change at some time, I feel that at our workplaces, me included, there's a change for a cultural, there's a need for a cultural change. Yielding too much to the client and finally getting caught. The client is nowhere in the scene. So we have to be extremely careful, being taken to task for disciplinary issues, all those things very unfortunate. We should really be careful and bold enough to tell the client that we will not be able to do this. Also, so I'm not preaching anymore. So coming back to impairment, yes, the test of impairment has to be applied. And then if there's impairment, that has to be mentioned and of course provided for provisions and contingent liabilities, the tabulation, all those things we have to really mention. So many of these things are not found in the significant accounting policies. One has to be extremely careful. Yeah, that brings us to JS2. Yes, very old standard. We have been living with it. Very thoroughly amended in 2003 after Dr. Manmohan Singh said that the accounting standards issued by the ICAI giving too many options. Then the options were reduced. So inventories, cardinal principles should be valued at cost or net realizable value, whichever is less, whichever is lower. So net realizable value, not market value, because your NRV is market price minus your selling expenses, incidental to make it reach the market. Okay, fine. So therefore, if that has very clearly understood, and that's a cardinal principle today, net realizable value at the end of the financial year probably would have undergone a sea change, would have depleted or reduced substantially. That has to be kept in mind, and based on that, you have to see the cost, and naturally, as cost we'll see as we go by. This is not as part of the bold letters as we used to see in the earlier days. Financial charges are not normally included in cost, in arriving at cost. But there's an exception. I think AS 16 borrowing cost has an overriding effect on AS 2. AS 16 says that the borrowing cost should also be capitalized or added to the cost of the asset if it takes a substantial period of time for its intended use or sale. Intended use or sale, which means that if your inventory is taking more than 12 months to be ready for sale, to fabricate something and then be ready and put it on a truck or something or a wagon or something and sell it, then it is a substantial period of time is 12 months. So the interest which is attributable to that period onto that particular unit of inventory should also be made part of the cost. That's the point I'm trying to drive home now. Recognizes absorption costing only. Please understand this. After 2003, all the references to direct costing method have been moved out, been taken out of the standard. So absorption costing only. What does that mean? Finally, we studied absorption costing principles. And I attended classes in Chennai. So R. Shivakumar, Rocket Shivkumar sir classes. I went and keep meeting him very often. So after becoming chairman also, I went and met him as a guru. Also, I did my articles in Chennai and 88 to 91. I attended classes there. When Manavaran sir had just started taking classes, he was so new that he would come out of the class and wait there for the students to ask questions. And then so that he could come better prepared, in the sense that he wanted the questions to understand from a student's perspective. And he has become an institution now. Bhupaji sir was more popular at that point of time, and he was a senior at the institute. We attended classes at YMI at Mylapore. I did with Varman Roma. Our office used to be on Cathedral Road opposite Chola Sheraton Hotel. Now Varman Roma is in Adar. Very, very 3.5 very eventful years in Chennai. I always say those were the best days of my life, like Brian Adams' son. Cost formula, when it comes to it, is only FIFO and weighted average cost allowed for general purposes. In very clear cases, specific identification method also, but as a general cost formula, only FIFO or weighted average costs are allowed. Allows exclusive method of GST only. This needs 1 minute to be explained. Now, what is this exclusive method of GST is, we assume that we are taking input credit on our purchases. So the accounting entry is purchase account debtor 100, GST input tax credit 18, to suppliers account 118. But because here the 18 you are not debiting into an expense account, 18 you are debiting into a current asset. Therefore, that 18 should not be part of the inventory valuation. So when you're doing inventory valuation, the raw material cost should be taken only at 100 and not 118 is the point, which is the third bullet point, exclusive method of dealing with GST. The next one is largely cosmetic. It is about the classification. A manufacturer today, many of our clients, those who are dealing with latex manufacturers, latex gloves manufacturers, surgical examination gloves, which has been huge demand with this, hygiene and safety in COVID times. So they have orders. Therefore, there's some.
You for a minute.
Yeah, please.
So regarding the GST exclusive valuation, certain products, I think eligibility is not there.
Yeah.
So in that case, shall it form part of the? Is the GST only eligible GST that is to be added to the GST sector, or the entire GST portion, even if it is ineligible, it has to be removed?
No, you see, only that's what I said. Only if you are eligible for input credit and your output should also be vatable. Your output is vatable, you either offset or get a refund if you're an exporter, in which case you debit it to a current asset. In the second case, which Dilip, you mentioned, we are debiting the entire 118 to purchases because we are not getting any credit. You are ineligible for input credit. In which case, 118 is your cost, no doubt.
Okay.
But in my case, example where I mentioned, only 100 I'm debiting to my purchase, otherwise fine. So here, if you are a manufacturer and a trader, your manufactured goods, the stock of that, you call it finished goods. Stock in trade for better understanding. Trading goods is called as stock in trade. That's all. Others, they are given a residuary classification of others if any has to be included there. That is mainly about valuation of inventories, but about the machinery spares also there has been a classification, but for the sake of time, I think we'll skip that. Not very, very important. So two standards, 1 and 2, we have covered fairly in detail. That brings us to cash flow statements. All companies except small, dormant, and OPCs have to prepare cash flow statements. I did mention this earlier when we were running through the chart of applicability, where we said that, okay, now this because the definition of financial statements under 2 subsection 40 says financial statements include balance sheet, P&L or income and expenditure as the case may be, and then of course cash flow statements and SOSE also, statement of changes in equity. But SOSE has not been notified as yet. So cash flow is today part of the definition of general purpose financial statements under the Companies Act. So therefore, they have to be, every company, exemption given is small companies. The small company definition also, please note that the definition has undergone a change. Small company is defined under section 2, subsection 85. A small company is a private limited company whose paid up capital does not exceed 50 lakhs or such other. Okay, leave it for ease of this thing for 50 lakhs. Then it says the turnover as per the latest audited accounts does not exceed 2 crores. So 50 lakhs of paid up capital, 2 crores of turnover. Now, what is the joint of? Is it and or? Originally, it was or. But later, they amended that definition, 285. It is paid up capital of 50 lakhs and does not exceed 50 lakhs and turnover does not exceed 2 crores. What is the meaning? To be a small company, you have to cumulatively satisfy both these conditions. Neither should your paid up capital be in excess of 50 lakhs, nor should your turnover be excess of 2 crores. If you are a small company, you don't have to prepare cash flow statement. All others have to prepare, OPCs and dormant also. All others have to prepare cash flow statement. Many of us have left this out, but please start. I don't think the regulator is going to come back and ask you for what has been done in the past, but at least now we have to be careful. And when this is done, the auditor's report cannot be a copy paste from the previous year. There also we have to report on the cash flows. Gives a true and fair view of the cash flows through the cash flow statement. Yeah. Okay. This is the common mistake I've seen, not prepared in many cases. And also the understanding of cash flows mainly from operating activities, investing activities, and financing activities. So wrong classifications. In one of the government audits which we did last year, in the final round of discussions, we found that they had mixed it up to say that the net cash flow from operations were positive. Factually, it was negative. So we had to reclassify and say, establish that no, the operating activities have resulted in a minus, but overall it was a very, very small amount of profit, but operating activities can happen. So therefore, one has to be very clearly understanding this. Indirect method, we are generally following the indirect cash flow method, not the direct method, which is indirect method is relatively easier, and therefore one has to keep in mind the requirements of AIS 3 cash flow statements. Sorry. AIS 4, all paragraphs dealing with contingencies are withdrawn because we have a new standard, AIS 29, provisions, contingent liabilities, and contingent assets. This events occurring after the balance sheet date, internationally they are called subsequent events. But here the name has still not been changed. It is contingencies and events occurring after the balance sheet date. Adjusting events, the point here is talking about subsequent events. Adjusting events occurring after the balance sheet date should be recognized and given an accounting hit as on 31st March 2021. And now we are doing 2021. Okay. Now, when we are doing the audit now, we have evidence that a client or a debtor has actually become bad. He stopped his business, he's absconding, or to think of an extreme that he's not traceable, business is not there, no money is going to be received. There's no information from the bank. All those things that can happen. Therefore, it is evidence that even as on 31st March 2021, this has become, not realizable. And you go and make a provision or a total write-off as on 31st March. This is an adjusting event. So this is called an adjusting event, an example which is given in that standard. A non-adjusting event is something which today, for example, let that not happen. There is a fire in the godown and the stock is getting lost. Substantial amount of stock is getting, charged to unusable level or to dust and ashes. But this is a physical thing which has been destroyed. It was existing on 31st March. It's a distinction they want us to make, and therefore that's a non-adjusting event, and that loss will book only in the current year. Or a machine gets stolen, for example, this year. No, then that is not an adjusting event. So the point here is all adjusting events occurring after the balance sheet date should be carefully evaluated, and if need be, should be provided for or given the accounting effect on 31st March 2021. Please allow me to have a. Thank you. AS4 continued. This is about the dividend. It's a 2016 amendment. Please recall the slides we had. Companies Accounting Standards Rules 2006, thoroughly amended in 2016, where the treatment of dividend, all of us senior members, I'm 29 years when I was introduced, 29 years in practice, time has just flown. So all these years we had Schedule 6, then we have this new Schedule 3, which is also undergoing tremendous change, huge change, aligning with the new CARO. It looks like it is more for the bankers, the classifications, all those things. And very, very, I would say that very demanding, challenging reporting requirements for the auditor under CARO 2020. Of course, it's not applicable this year. That let me make it clear. Another thing which you have to preempt is this amendment has happened. Amendments to Schedule 3, not applicable for 2021 audits. CARO 2020, not applicable for 2021 audits. Both are applicable from the running financial year only 21-22. But for your quarterly Q1, once we start doing June, it is high time that again the branches, please take note, organizing branches, please take note that we should have programs on CARO 2020. Long back, thinking that will happen, we had a program at Cochin, which was dealt by none other than PR Ramesh, the national head of Deloitte. Which is rich experience, CARO 2020, which calls for foresight, hindsight, current affairs, and also ask the auditor to say that whether the entity would continue in existence in the foreseeable future. So some kind of Jyotisham is also required. The auditor has to be, doing forecasts. So therefore, the very demanding. So CARO 2020 for Q1 of 21-22 applicable, and the new Schedule 3 also for interim financial reporting would be applicable. So I think we should also have sessions on that. But for this session and for 2021 financial audits, no CARO 2020, no new Schedule 3. All things continue. So dividend here is that proposed dividend we used to provide for. Like we earlier it was appropriation account. Then after the net profit for the year, then we bring in the brought forward the reserves, and then finally we say that okay, proposed dividend. But AS4, the revised AS4 says that there is no such practice internationally. There's no such practice internationally, and therefore there's no proposed dividend. And naturally, there's no corporate that is going out. Of course, the corporate dividend tax earlier we used to have, which is now abolished, and the dividend is now getting taxed in the hands of the shareholders from this year. So not to be treated as a liability. But then it requires disclosure in the notes on accounts. Very important. Those are the main points about AS4. No, net profit or loss for the period, prior period items and changes in accounting policies. Extraordinary items, non-recurring items which have an impact on current years, if they're material enough, having an impact on the current year profits, has to be separately disclosed as a line item. And net profit or loss for the period also. Current year, this starts by saying what is the importance of this, net profit or loss for the period. In determining net profit or loss for the period also, major items, we have the idea of grouping items like miscellaneous expenses, general expenses, and things like that. Whatever is significant enough in determining the current, though it is belonging fully to the current period, determining the net profit or loss for the period, yes, that has to be separately disclosed. Extraordinary items, yes. Prior period items. Prior period items are items which fall into particular accounting period due to errors and omissions only, complete errors and omissions. A short provision, which is like, for example, we make a provision for bonus at, let's say, 1 crore of rupees. But finally, when it's actually paid, it's 1 crore and 5 lakhs. That 5 lakhs is not a prior period item. But it's a total omission of making a provision for bonus, current previous year's bonus falling into this year, and then it has to be treated as a prior period item and separately disclosed. Changes in accounting estimates, it has to be given in the notes on accounts, like useful life of an asset. It can happen that assets get impaired or probably outdated due to technology changes, obsolescence. A lot of things can happen. Therefore, it is possible. It's possible that changes in accounting estimates can happen. Changes in accounting policies, as we discussed, change in accounting policies thought desirable or rather allowed only in 3 situations. One, it is mandated by law. For example, today Companies Act allows both SLM and written down value. Today, if the Companies Act is amended to say that no more SLM, only WDV as in the case of income tax, then every company that's following SLM will be forced by the application of the new law to change over to a new policy. 1. 2, it is mandated by a new standard or a revised standard. When we come to AS7, I'll tell you. AS7 construction contracts earlier used to allow both completed contract method and percentage of completion method. Completed contract method and percentage of completion method. It was amended to say that now only percentage of completion method is allowed. So all the entities who have been following completed contract method has to change over. That is mandated by a new or revised standard. A third one is residuary, which is for the management, it's for the auditor to apply judgment and see what's really required that. If it results in a more appropriate presentation, fairer and more appropriate presentation of financial information, yes, you are allowed to change the accounting policy. But this is a change in an accounting policy, as seen in AS1, read with AS5. The impact of that has to be quantified and mentioned in the notes on accounts. Under the accounting policies, that accounting policy change has to be mentioned, along with the financial effect that has to be mentioned. That's the spirit of AS5. I would like to take a 1-minute break with your permission. So, Praveen, I'll take a 1-minute Yes, I'm back. Thank you for the understanding. So change in accounting policies, these three situations, yes, if required, we can change. And it should not be like every year change. Somebody said, I think it was Manoharan sir at some point of time, mentioned about this. He said, selecting an accounting policy is almost like selecting your life partner. You should be careful, thoughtful, choosy, defining all your priorities, educational, background, history, geography, all those things, and reputation, financial. And then once you select a policy, you should remain loyal to the policy until there is a bona fide requirement to think about another policy. So that's well said about changing of an accounting policy, which is a mix of AS1 and AS5. AS6 and AS8, I don't have to say anything. They have been withdrawn for good reasons. One AS6 depreciation standalone standard was not required. Internationally also, there is no standard like that. IAS 16 on property, plant and equipment is a self-contained standard, which also deals with depreciation. So therefore, that has been blended into AS 10, paragraph 40 to 60. Those who may want to refer, yes, take time, peacefully read through. And today, learning, we are finding it very difficult, particularly sole practitioners. I'm seeing that, the stress between work pressure, domestic pressure, and the most important thing is to continue to learning and be updated. So that is where I'm happy that branches are doing a lot of programs. And these times, the online platforms like Zoom and all that has brought us together, irrespective of our geographies. Probably even when you're traveling in the car or on your smartphone, you can keep watching this. So that's really nice. So AS8 research and development is an old story, but for understanding, saying that research and development, what happens is there are researchers and then people who do R&D. So research is the first phase. You research and finally say that come out with some kind of a sensible finding, a commercially viable product. Let's say, for example, a pocket UPS, which can be carried and which can give a support backup of 3 to 4 hours. But if the researcher finds that this is my wonderful finding, this is my proud project, but I will not commercialize this, then the entire research expenses have to be expensed, is it not? So for research and development to be being eligible to be capitalized, there are 3 conditions they say. One is that a commercial product or a concept should have evolved out of the research. And then the company, like we're doing the audit of a company, the company really intends to commercialize that. Intention to commercialize is very, very important. Intends to commercialize that. And the third one is the company has a wherewithal to do the commercialization. Either they have their own resources or they have the credentials or credibility to borrow and make this project happen. So that is about R&D. So failing which, any outlay on R&D has to be drained down the P&L account. It cannot be becoming part of the intangible assets. So I take a leave from AS26 there. AS26 says that, yes, AS26 says that any outlay on an intangible, can be capitalized only if it meets recognition criteria. Recognition criteria is a technical term I've used. What is recognition criteria? That, again, as I mentioned earlier, this should have resulted in a product or a concept, and this is the idea of that getting commercialized. Only then that will meet recognition criteria. Otherwise, any outlay on intangible, you research for 5 years, 6 years, until and unless you have a commercially viable concept or a product, and which is intended to be commercialized, and you have the resources and wherewithal to do that, yes, capitalize it. Otherwise, all down the P&L account. AS7 construction contracts. Construction contracts include destruction contracts also. You would have seen in the last few years, if you have been to Mumbai, or if you have traveled in the Middle East, particularly in Abu Dhabi, I've seen a lot of buildings are being brought down, like the 3 notorious buildings which are brought to ground in less than 10 minutes, one after the other in Cochin, because of the violations of the coastal rules. A lot of buildings, because there is a statutory requirement, I think in Abu Dhabi it's 50 years. So no building which is more than 50 years are allowed to remain there. They have to be demolished and they will excavate and reconstruct and all that. So therefore, am I audible, Praveen?
Yes, sir, you are audible. Yes, sir.
Yes, okay. So this is happening. So construction contracts, when it comes to, have to be a contractor, not a builder. A contractor, yes, now the revision in the standard is that you are allowed to complete, follow only percentage of completion method. Let me try to give us a very simple example. I think some of you have heard me earlier. Please excuse the repetition. Even at the cost of that, since we have close to 300 members, many of them may be new to this. I just trying to make it simple, not that you do not know, but making it a very simple presentation. I am getting a contract. I'm a contractor, civil contractor. I'm getting a work of a particular building for, let's say, the government, Kerala state government wants to construct a building. I'm getting a contract for 120 crores, 120 crores. And the estimated cost of completion is 100 crores. 100 crores. What is my estimated profit? 20 crores. So we'll avoid crores now. 120, 100, 20. I'm starting this contract now. Or for example, I started the contract in August 21. I'm sorry, August 2020. So August, September, October, November, December 5 plus 3 up to March. I have 8 months into the contract work. And I have a work in progress. The work is in progress. So the contract expenses is 60. Contract expense is 60. What does that mean? It means that in the absence of cost escalations, my contract is -% complete. Can anyone support me? I repeat, 120 is a contract price. 100 is estimated cost of completion. 20 is estimated profit. Year 1 end of 8 months, which is the first financial reporting period, my contract expenses at 60. So in the absence of escalations, my contract is -% complete. Some of the younger members could unmute, admin can unmute and then respond.
5%?
Sorry?
75%?
I know it's 60% because 100 is my estimated cost of completion.
Cost, okay.
60 is there in the absence of escalation. 60 is 60% on 100, right?
Yes.
So the question is, how much should my work in progress be? And the completed contract method, we all know that my work in progress should only be 60 because we'll recognize the entire profit of 20 in the second year only. But here, under completed contract percentage of completion method, it should be 72, which is 60 plus 60% of my estimated profit, which is 20. So 20 to 60%, 12. 72 should be my contract work in progress, and net profit of 12 subject to administrative and marketing expenses. I hope it's clear. Look at the second year P&L. Opening WIP 72. Construction expenses, the balance 40, 100 minus 60, 112. What's my contract receipts? I do the final billing. What's my contract receipt? 120. Profit is 8. So the profit of 20, which is the full estimated profit of 20 over the contract, which is being split into the financial years, 2 financial years, based on the percentage of completion, either by physical measurement or by financial outlay, subject to adjustments for escalation, etc., etc. This is a cardinal. It's easy understanding of this, easier said than done. So therefore, in straight contracts, I don't think it's a major complication. It is still possible. It can be done. Therefore, this is percentage of completion method. And today, AS7 recognizes only this method. Internationally, if you look at IFRS and all that, there's something called the first method is called allowed alternative 1. The first method is called second one is called the allowed alternative. The first one is called the benchmark treatment. So if there are 2 alternatives, one is the benchmark treatment, the other one is called the allowed alternative. In AS7, they have narrowed down. There's no allowed alternative, only the benchmark treatment of percentage of completion method. I hope it's clear. That brings us to AS9, revenue recognition. Revenue recognition is a very sensitive aspect. Today, software companies and things like that, unbilled revenue, there are new terms being used. So this standard deals with how and when and to what extent revenue can be recognized under the various categories. One is you are a manufacturer or a trader, sales, revenue from sales. You're a service provider, services. A lot of examples to be thought of. Interest, royalty, dividend. Let me start with sales. Sales, they say that ownership should pass. So if they say that the rewards and risks of ownership has passed from the seller to the buyer, it's at that point of time that the seller is able to recognize revenue. So normally based on the contract, they say that it is, if you say that once it is dispatched from my factory, it is at yours. So the transit insurance, all that is, yes, is all these things are recognized, then all these conditions are met, then you can recognize revenue from sales. When it comes to services, different type of service contracts are there. So the accountant as well as auditor should look at what has been explicitly agreed upon in the agreement of services that you're providing a service. You are providing, for example, AMC. You are doing a garden maintenance contract. You're providing various kinds of services which we avail. Okay, plumbing services, all those things. So where today catering services. Most of the corporates today outsource their entire facilities, like companies like TCS and all that. If you go to Chennai, that area, or Bengaluru, large corporates, particularly IT and tech companies, they have 300,000 to 4,000 staff having a lunch or a tea time. So the cafeteria is not managed by the companies outsourced. So what is the contract and what time? Maybe it's a monthly billing. All these conditions have to be satisfied. Yes, based on the terms of the contract of services that you recognize revenue from services. This should also become part of the revenue recognition, must be part of the accounting policy. I did mention that in the first earlier slides, one of the earlier slides, when we talked about the non-mention in the accounting policies about that. Revenue recognition was one of that. Interest, as you know, interest income, if you have given a loan, if you have given made a deposit, etc., interest income, interest accrues. Interest is a function of time, therefore, based applying the rates and the time for which the loan has been or advance has been outstanding, or the interest earning investment has been outstanding. It could be debentures, etc. Based on that, you can recognize revenue from interest. Royalty, again, based on the terms of the agreement. And the other day, I was reading an article on Mamata Banerjee, not turning political here. Where does she derive the power from? Her background. She has come up from a very, very difficult background, like our SIRC chairman, even from a more difficult background. She has come up and she is an author. She writes books. She has written so many books, poems, and she earns approximately 2 crores per annum as royalty from her books, which are widely read. All should be in Bengali, I presume. So I have a Calcutta connection also. My father was a joint financial advisor to Hindustan Steel Limited, which is now called the SAIL, Steel Authority of India Limited, at its CMO in Calcutta. So Papa spent about 10 years of his career in Calcutta. So for our summer holidays, we used to go to Calcutta, and those days it was Jyoti Basu, and then it was Buddhadev Bhattacharya, and the leftists were, thrown out of power, and Trinamool came to power. I'm not talking politics. So royalty, Mamata Banerjee's story is very, very inspiring. I'm not talking about what she's doing right, politically right or not, as a person, as a, proving that, strength doesn't come from a physical capacity. Strength really comes from an indomitable will that's applicable for every one of us at every stage and every age. So that is just referring to about royalty. 2 crores per annum, not bad, isn't it? So Praveen should be quit practice and start writing books. Incidentally, I have written one recently. I was not driving the story to that. I recently released a book called Trails. Malayalam Pinpadagal, Trails.
Oh, fine.
Which was released on February 6th, which is in Malayalam, Manglish, and English, which is released by a person whom I admire and like a lot, Vailar Sarachandra Varma, the son of a legendary Vailar Ramavarma, at a function in a Gymkhana club in Cochin. So become an author also. It is about life, reflections of personal and professional life.
Sir, if I remember correctly, we were promised a copy of your book after once it has been released.
Sure. No, seriously, Dilip, I was planning to have a visit all the branches because I have plans ahead for me and for every one of us. Hopefully, I understand. I have started calling some of the seniors aspiring to serve at a higher level. So I was planning a physical visit. So I have 2-3 carton full of books where I could bring to Trivandrum, Kollam, everywhere, because from down south, I was planning to have a visit all the 9 branches. So hopefully, if COVID situation gets better, that would happen soon. I think I've kept all my promises in my professional and personal life. So I hope to deliver that as well. Thank you so much for remembering that. And that is it's a 102-page book, and part of it is business laganangal also. That is about businesses. It is a cocktail of everything. And then the second part is all travelogues, 5 travelogues: Maldives, Dubai, UK, Kuwait, and Bali, Indonesia. Okay, so that's how it is. Not deviating from the point. So I'm not getting any royalty. The book is not priced also. The opinion of the reader is the only price that I expect, and there's no price. So that is how it is planned. So back from Mamta Banerjee to authoring books to accounting standards, which is core business today. Dividend can be recognized once the right to receive dividend is unconditionally established. That is once it is declared in the AGM. See what happens. Dividend is first financial statements are drawn. We are all part of that process, the boardroom wards and all that. And then in the board meeting, they say that let's recommend a dividend. Today, I was just reading an article about companies like Geojit, very richly rewarding the shareholders. In the last 1 year, its share price has gone from 17 to 70. That is 3.7 times growth in the share value, keeping the shareholders really happy. CJ George sir is a friend of our profession also. He had supported our conference and very closely associated with our profession. Most of the time he comes for budget speeches and all that on capital market. And also proud that Geojit is India's first internet stockbroker. Internet, you say capital market intermediary, first internet one. Really proud to be off, and companies doing well. So are the case with many of the other companies in Kerala. V-Guard was an example. So dividend, that's how we do it. And here, since AS7, construction contracts are outside the scope of AS9. So that makes me make a mention as a note that AS7 and 9 are mutually exclusive. They not clash each other. If you have a construction contract, don't come to AS9. We have very clearly said that you follow AS7, which is percentage of completion method. And in the time, I have given an example as well. Okay, fine. Now, I think with that, I've covered the introduction fairly in detail, the standards, AS1, disclosure of accounting policies, AS2, valuation of inventories, AS3, cash flow statements, 4, events occurring after the balance sheet date, 5, net profit or loss for the period, prior period items, extraordinary items, accounting estimates, changes in accounting policies, 7, construction contracts, and lastly, 9, the revenue at what point of time and to what extent and how and how much. Now, we had a presentation the other day in Kerala Management Association. In my introduction, I think Rajneesh it was mentioned as treasurer. It's not his mistake. This year, I'm serving as secretary of the Kerala Management Association, which is very interesting and challenging. The other day, we had a program where the lady speaker was talking about WWH, not WWW, what, when, how is WWH. The new terms, all these trainers are evolving over a period of time. Tulasidaran sir has raised his hand, sir. Anything that, any questions? Let me look at the chat box so that there are 6 questions, I think, in the chat box. I think we can go to that before.
So we do have a question answer session if after you are finished with.
Okay, that's better. I completely agree with you on essays. Only IT and GST, CSL. Okay. For partnership firms, capital like high turnover, we don't worry about AS3, right? Okay. Right. Can you explain the treatment of difference in software 145? I think. Okay, I think I will leave it to Dilip to raise those questions, pick up those questions, edit if need be, and then we will discuss that towards the end. I think I'll take only maybe another 10 minutes. I think we'll stop early. Let not the institute know this because they applied for 3 hours, so 2 hours of CPE credit. No, not intentional, because there is no point in dragging beyond a certain limit. That is I always believe in. And questions, of course, we can continue. I'm game till 5:45, 6 o'clock. I have a program committed to the on-call branch, which is in Andhra Pradesh. I was invited as a guest for a program of theirs. So till 5:45, I'm completely with you, even a little beyond. So this is about the AS9. Now, this year and last year, of course, after March 20, we had this lockdown. First time we started, we were so scared about the lockdown, how things are going to happen. But the institute worked overtime. And also I've given to understand that the central council deliberations these days are more effective, less expensive because there's no travel, no stay in hotels, and therefore more of effective deliberations. On the screen, everywhere, all the council members together, 32 of them, and government nominees if they are there. And in March, right from March, in March 26th, if I remember correctly, 2020, last March, they came out with a publication, Joint Advisory of the Accounting Standards Board and AASB, which is a very, very important document. So they are called COVID pronouncements of ICAI. I had done at least a dozen presentations across the region on this COVID pronouncements and how we should understand that and apply in the right spirit of things that we are, or the situation that we are going through, like accounting and auditing in times like never before. And we thought never before, that time we said never again. Then came the second wave. So we are now praying that, yes, it should not happen. Now somebody has started talking about the third wave and saying that's going to hit people, so kids of below age of 18 to 40 have been vaccinated. I think that's a huge amount of my personal view. It is orchestrated, it's fabricated. A lot of facilities towards the end of the second wave, which hopefully is subsiding now. TPRs have come down. It's a lot of medical facilities have been set up now. For them to break even, another wave is required. Another wave is quite essential. Therefore, I think there is a global game. I don't know, not country specific. Right from the outbreak of this, and see how the countries where it started, China and all that, resumed normalcy. They are now again back as a factory of the world. I did mention about Budapest and Roland Garros, French Open, where that's being played. So crowds are coming back. We are still confined. Forget all that commercial activity, touring, traveling, all that. Our regular office activity, we have to cash flows. We have expenses are kind of rent. Of course, all of us are going to ask for. We should. Let me tell you that all of us should ask for some kind of a rent waiver reduction through the lockdown period. We today partners. In morning we discussed. We're going to write a letter to the landlord saying that we'll not pay rent for May. And right from April through the year, we are asking for a 10% reduction. So wherever possible, we should cry for it. And if there are facilities, get the facilities which are available for MSMEs and all that. We can register as MSMEs. I think all of you should look at that. We got registered as an MSME. Yes, creditors, suppliers, vendors. I'm sorry, receivables can be managed if you want to go to the next level. A lot of things can be done there. So third wave, I think, has to be created to make all these facilities break even, make some more money, and a few deaths will happen. We also lost some of our members in the process. I was seeing Shankar there. We lost Sir Satyavaishan sir, and a young member, 44-year member, Ajit, a partner of Sajeev. We lost some of the members, and across the country, we would have lost so many of them. Very unfortunately, some of them took it passive. No point in, fault finding now. And I was extremely careful. I hope that all of you are vaccinated. I've vaccinated, both the doses have been completed. And Ernakulam, Koilon, I think most of the branches have now done that. Ernakulam, we did 2 rounds, 300 plus 280, 580 vaccinations were done at the Apollo Athletics Hospital. Trichy did about 400 on the second day that Ernakulam also. We were together. Aryan was there, our entire team. Wonderful job done by these 2 branches. I was there throughout on these 2 days there, and great job. Aryan, if you are there, once again, in the front of all these 260 people, Praveen also, Trivandrum also, I think they are not, to all those who have enabled and this vaccination process, that's something which all of us should do. We cannot delay it. And then those who have been affected by even for after the second dose, turn positive, the impact is so mild, and recovery is also faster. So therefore, let us be careful. But while being careful, we are not going down. Well, we are hopeful and positive that positive in the right sense of it. Today, term positive has to be used carefully, and that this shall also pass. And the profession, all of us in profession should move forward. Consciously, we have to take efforts for that. So once again, my kudos to all the branches who have taken such good initiative. I'm seeing Rama on screen now. Rama, okay, we're back. All of them for the great job which has been done by all these branches. And if need be, we should be ready for the second dose. For those who have not taken the second dose, we should gear up. So, and we are also associated with many social organizations. It could be Rotary, it could be a residents association. They're all, I think, we can really enable this to happen. So let me now come back to the last part of the presentation. Then we'll have the Q&A. So AS 7 and 9 are mutually exclusive. Just give me a minute. No? Thank you for that. I know that we have time. We might stop a little early. So now I was talking about this pronouncement. So going concern, auditor's report, inventory verification, all those things, there have been publications. So in this accounting standard presentation, before I conclude on this, I thought we should have this COVID lessons, last but not the least. COVID challenges. Going concern, yes, we approach audit situations today with some kind of a doubt, and that's the second bullet point. I would draw reference from SA 200, Standard Auditing 200, which is the first standard, which in 2008 for the first time used this term professional skepticism. What is skepticism is, and it says that all the COVID pronouncements, the common thread, the spirit of that is that the concept should stand amplified, and meaning that, sir, we trust you, sir, we trust you, but let me verify. Don't feel bad. Agree, we agree. But skepticism is nothing, in layman's terms, nothing but taking everything with a pinch of salt. Okay? Not taking people, documents, and explanations for granted. We are a doubting Thomas. It's a biblical term, not talking religion here. In Malayalam, Tottu Vishwasikkunavan Thomas, only touch feel and say that, okay, it is actually there. So are we attending physical verification? Are we deputing people for physical verification, or just relying on a sheet of paper or an email sent by the client saying that my inventory value as on 31st March 21 is 1.85 crores? That is a warning. Those are the warning signals which we have to take it in the right sense of it, with the right spirit, and apply more judgment. And if judgment is, to make judgment, we have to be informed. So refer pronouncements. Lockdown time has been that way, probably most of us would have used that for a little bit of learning, reinventing ourselves, looking into ourselves. That's all very important that we do. If we have not done, it's still time, not because we have a lockdown or so, but essentially we should look at that kind of improvements. So here, applying more judgment in audit situations, large audits, small audits, going concern, all that is something which one has to be really, really aware of, and not just aware of, be very, very clear of applying. Let me hear about the COVID challenges. I don't know whether you have read that. People like MH Kumar sir, I don't know whether he's online with us, had read that in the last month SIRC newsletter, we have a column called Leaders' Thoughts. So every SIRC member, council member is given an opportunity. So I had written on this COVID. So what are the COVID lessons which we should have learned, or rather we learned? Let me take 2 minutes, as we have kind of topically complete that. The first lesson, I think we asked, today there was an article in one of the Malayalam business magazines. The first lesson, I think, was the partners we asked, sat together and asked was, do we have the reserves to pull on for 2 to 3 months? What kind of reserves? Fixed deposits, or something was equally liquid assets? If it is there for 2-3 months, it's kind of okay for the firm and also for the partners. The second question was if that is not very much there, do we have how much are our receivables? Are they genuinely receivable or not? So this is something which is very important for the profession. My next slide is about that. We give undue credit and we concede to the client saying that there are a lot of issues. So when the going was good, we were reluctant to ask. Now when they're in deep trouble, how do we ask? So receivables, luckily we found that we have very strong collection policy. I'm sharing some internal experience of the firm where strong collection policy and found that yes, receivables are there, but none of them are going to be really bad. Of course, there could be some delays in cash flow. Now, delays in cash flow is something which we should be aware of in planning for the next 3-4 months. I would request every one of you to have an annual plan for 21-22 and break that into 3 months plans. Break that into 3 months. Say now let us lay out June up to 30th September. Then 30th September till December to Jan to March. Then you would see that, okay, we cannot delay payments. We have to pay the salaries of our people. We have to pay the rent. The stipend has to be paid on time. If possible, the month end itself, decent stipends, which all of us should pay. So therefore, that's very important. The outflows are kind of defined. So what about the inflows? And all of us have commitments, financial commitments, like saying, EMIs, for example, housing loans, vehicle loans, students' education, kids' education expenses, your commitments. If there is somebody who's ailing in the family, elderly, somebody who has to take care of parents. So are we doing this or we are taking 1 minute, excuse me. Sorry. So this is something which we should be really aware of. So this is about the topical aspect of it. But this, I think I've come to the last slide on this. So being skeptical, being a little more of a doubting Thomas, absolutely no doubt in the what will the client think? What will the client think has always been the worry. But the client never worries about what will the auditor think. I'm not asking you to be anti-client, but shield ourselves. I've seen a lot of members, senior, while I was chairman of the SIRC, the disciplinary committee sittings happen there. Very unfortunately, some of our irrespective, not that they have been habitual wrongdoers, being casual, taking things for granted, as I mentioned, or not applying professional skepticism. Take this from me. Every one of us is today susceptible, vulnerable to that kind of risks. And the clients today would, in the given circumstances, particularly larger organizations, not the client, the finance people, the finance team would probably hide crucial information from you. Do deep dives, dig down until you are able to either confirm or dispel the doubt that you have. So with that, let me move on to the last slide before I take the questions, which will be coordinated by Dilip, I hope. It's something which I've been talking about. We have 250 members, 237 as of now. So let me take only 5 minutes to say something which is very relevant for the profession. It's very important that, so I forgot to say, that's the time I had some disturbance here. So the third question was in COVID times was that, what is the technology you have? We are going to say that work from home is a new order. Is it really going to happen? Do we have the wherewithal? Do we have the facility? Do we have the devices, the hardware devices, the technology to make sure that we are able to have real-time access to the servers, pull down information and then pull out information, work it and store it back? What is a backup? What if data is stored? What if the the server is hacked, or rather a server is unauthorized access to the server is happening? Students given access, real-time access. So these were the concerns, and all these could be addressed to a great extent. But I think there is first two parts are very important, and third one is equally important. It's not expensive. I think we had a session on remote working tools a couple of days back. I'm making now working on a presentation on work from home is really happening by the members. Many of them talk about doing, but it's not very difficult, not very expensive. Every one of us, it is doable. In simple terms, I would say it's doable. So maybe 10 days from now, I'll be through with a short presentation on work from home, how this is work for us, with real examples on how to work for us and how expensive it is. And then probably we'll take it up from there. Those who are up and running, fine. Others, many of them might need support. So let's discuss as we go by. Talking about that now, that brings us to this last aspect of this. I've always been talking about office infrastructure today, branding, all those things are very important. We should have a decent infrastructure. Maybe you need to invest a little. I'm also hopeful about not about the revenge spending. Businesses have to come back. There could be delays in cash flows, but most of our work today, if you see, are mandatorily required. And therefore, some assignments on new project reports, all those things, but startups, somewhere, something is happening, some inquiry is happening almost every day on forming a company or doing a business valuation or, understanding or doing some kind of consolidation, advisories, succession planning. This is happening. So we need to have the real infrastructure in place. First, I talk about even the office ambience and the facilities that we have, the work desk. Let us know that more of our waking time, the time we spend at home, I think 80% of that we are sleeping in the night. Work time, yes, sleeping, waking time we are spending at office. So decent workplace would make it healthy, hygienic, very important. And technology, I did mention. I'm not a very high-tech person. I think people like Padmanabhan is there from Trivandrum. I think he had put a query and all that comment. So people are really tech savvy, that we should imbibe more of technology and make things happening. We have started advising, we are in discussion with a group of people on RPS, robotic process automation, in an NBFC, where this routine verification of files, there are about 10, 12 unqualified people working in there, very low productivity, things are not happening, findings are not good. So RPS are being planted into that process. So which would make things easier, and that would happen. They don't take tea breaks, they don't take rest. It's not that humans are going to be replaced by that, but here are the unproductive things where these people changes organization culture also, dilutes that. Therefore, RPS you started talking about in a small way. Every one of us you have stories like this. Let us continue to share on common platforms. People and processes, every growing firm, every well-meaning firm for whom growth is still on their agenda, must think about having a good team, young partners, training people, articles. Today, there is no dearth for getting students. It is the practitioners market today. So we should brand ourselves properly, develop an academic culture, and you will have a queue of students in our office after every result of intermediate. Processes, yes, I did mention about peer review. Standardize the processes. Make sure that there are checklists. For example, we have a checklist for the partner signing the balance sheet. It has to be filled only after that the checklist will be signed. And there's also an UDIN control. I get a lot of calls saying that the UDIN forgot to generate the UDIN. And then, of course, there has been relaxations. But why don't we make it a point that I'll not sign without the UDIN? And do not share the OTPs and all that. So it is an OTP control, so easy to manage. So we should do that. Processes should be improved. Billing and collection. How mature we say? Recently, we were invited by a group, which is a very well-established group. They are embarking on a new project where they wanted to engage us. Me and my partner went for discussion. We went prepared with the PowerPoint presentation, with the brochure of the firm. I think properly attired and prepared for the presentation. In fact, a bit of a rehearsal was also done because we were keen to get that assignment. A very exciting assignment. And then yes, everything went on well. They were happy. And that company just started, and we asked for a quote. And we gave a quote in the first year, small amount. It's not a huge amount. And then they have another big group company, which is having a turnover of about 300 crores, a very popular brand. And there I understand the fees was only 50,000 rupees. So how do we continue like this, and why should we continue like this? They will not ask for an increment. So in the result, what happens is our fees, which is quoted for this company, which now I can share with that 50,000, we quoted 1 lakh for the first year. That could have only capital work in progress. Commercial operation will not start. So we are not talking, money is not everything, but then we are not a service organization. Let's make more money and do charity. And let us not, undersell. That's very important. Undersell. Equally also, let's not overpromise. It is always better to underpromise and overdeliver instead of overpromising and underdeliver. So billing is something one should be conscious of, at least with new clients, established firms. I have heard people saying that these clients are with us for the last 20 years. How do we make? What about new clients? New clients, somebody is coming in search of a firm. Is it because somebody has referred? Particular reference clients, you should put the fee down and say that this is our fees. This is what we would go for. You put a slab, incorporation or audits. All those things I think we should do. It's possible. It's doable. and collections, where do we give credit? Don't give credit for company one-time assignments, project reports, company incorporation, partnership deeds. Audits, of course, some amount, of course, we are used to that. Even then, if you go to the Middle East, where the practice are very, very, credit, 90 days credit is kind of standard there. But many of the auditors, reasonably established auditors, there is no prohibition, there is no Companies Act there. Of course, commercial law is there, federal commercial law is there, but then there is no prohibition. They take a 50% advance for the audit. Let's forget the advance, at least give a decent credit, you can do that, but not 90 days, 120 days. Or like somebody said, he's a very strict auditor. You know how a strict auditor is defined as? He will start only current year's audit only after getting previous year's fees. So 12 months credit, let me tell you, please tell me, the 230 of us together, please tell me one industry which gives 12 months free credit. And how do you think any industry having a borrowing, a working capital limit of maybe having a 20% gross margin and 8% net margin survive with the 12 months of credit? We should not. So do collect promptly. And timing is very important. I said quality service you give, terms of engagement. And the next one is personal financial planning. We do a lot of financial planning for our clients, but for individually, many of us do not do that. In 2014 or 15, when I was in Guntur, that time Companies Act 2013, 40, I think it was in 14. Companies Act 2013 had just falling into place, so it was a hot topic. Rotation of auditors, this was discussed, etc., etc. And then I asked this question: how many of are insured? I'm not talking about anything else. Term insurance for more than 50 lakhs. A senior member got up and in that Telugu accent, yeah, Mr. George, good question. Small correction record. Ask them how many of you are insured at all. So personal insurance, personal accident, life insurance, medical insurance at low premiums. Institute is enabling that. I think many of us have availed that, the life insurance premium of the committee of members in practice. So do a lot of financial planning and let your family members know, young and senior members. I think your family members should know what we have and an asset liability statement kind of thing. It is possible, I think, because sometimes they may not know if something happens, not know which is your bank account, and then it's difficult. I'm not talking about, we have had instances like this in Cochin when some of the members called back very early, unfortunately. The resources, they had some resources, but the family was absolutely unaware of, oblivious about what is there, what is not there, what are the liabilities. So very important that we do it. Attitudes today, we are more into the COVID and all that. We are looking into ourselves more and more on how we can improve. Bigger, better, bolder is the baseline, as you can see, of our firm. So how do we improve ourselves as individuals, as social connections that we improve? Stay relevant to the society and people around you is very, very important. And cut down on social media. My request to new generation, I took WhatsApp 4 or 5 months back only. But now I know that eating up a lot of my time. So I need to cut down. So all of us are wasting a lot of time on social media, trolls. And I'm also very unfortunately seeing after 11 o'clock, there is a message on CBDT circular. 11 o'clock in the night. 4:30, somebody wakes up with an MCA circular. So can I request every one of you to disconnect by 10:30, or you be connected, but not on CBDT? Listen to some songs, some fun, or some family game, whatever. So please, let's see whether the sky is going to fall or not. Imagine 4:30, if you are not disconnected, I try to disconnect, but then if not disconnect, 4:30, there's a beep and you see that, okay, new MCA circular. My God, why are we like this? Enjoy life a little more, take life easy. Still, we can be, I think, more productive at the workplace. So lastly, I'm talking about something which I'm very passionate about. All our offices are different style Gurukulams. I always say the kids come there to get themselves trained and pass out. They're not workers. How much ever we say 10% of the new generation of the students, we take a lot of filtration we do, screening we do, but there could be dissidents. But for the rest of the 90 who are the future of the profession, I think our offices should become substantially more student-friendly. Develop an academic culture, have internal meetings, programs, empowerment programs, induction programs. We had 12 of newly semi-qualified. 9 of them were both passed with the result in Jan Some of them had opted out. All of them, all the 12 are now semi-qualified. We were planning to do a one-day induction program about students. Motivation, what JVR does, what are the things we should be careful, the GST basics, the technology basics, the culture of the firm, auditing standards, a little bit of that. Processes, one-day induction, let's do that. So they are oriented into the process. So that I think that one day spent as an investment with a lot of ROI on it. So these are things which but it could not be done probably if things normalize in a 2 weeks time, we'll do that. So what's important is with all that, our firms, offices should become happy organizations. All of us have work pressures, domestic pressures, but evening when we sign off, should be not worked up and thinking too much about the client, thinking too much about work and all that. So somebody said, my house is 3 songs away from my office. House is 3 songs away from my office. So get into the car, try to listen to some of your 3 favorite songs so that you don't carry the pressures back home. So these are things which I thought would be very important for our discussion today. So with that, I would wait for the questions to be answered since then we will conclude after with some remarks on conclusion. So Dilip, are you doing it? Then I'm fine with your coordinating that. So thank you very much, every one of the participants and the organizers, particularly Prabhan, the chairman of the lead branch, and all the managing committee members of the 5 branches, Trivandrum, Koilon, Alappi, Kottayam, and Thrissur, for inviting me to this program. And I'm happy that we could line up 2 other speakers who are much more experienced. They have much bigger exposure being in Chennai and Bengaluru than what I have, and would enlighten us on the other 8 more standards tomorrow and day after. So wishing the entire series a great success. Let me conclude to answer your questions. Thank you so much.
Thank you, sir. So friends, there it is, a lucid and proficient address by the erudite faculty for the day. CA Jomon K. George. Let me, on all your behalf, thank him for that. And it's time for you to ask your questions. So I would request the Trivandrum branch to unmute the participants so that they can ask questions. And if unmuting the participants come to is creating a chorus, I would request everyone to use the chat to post your questions so that we can handle it in an orderly fashion. So if you would please unmute everyone, Trivandrum branch.
Dilip, before that, I think we have some questions in the chat box. I would attempt to answer them and then let more questions.
Please do. It's not visible for me, and the question will be moderated by the chairman of KOLLAM branch, CA Praveen Nara.
No issues. Okay. Now the first question, first is not a question. I think Mr. Padmanabhan has said that I completely agreed with you on essays. Only IT and GST CS will attend. Okay, we did mention that. Sir, for partnership firms with capital above 50 lakhs and a high turnover, we don't worry about AIS 3, right? So AIS 3, that level 1, level 2, level 3 enterprise classification, I have to, Prem Sebastian has asked this question. So I have to revisit. I'm not able to give you offhand the answer. So that is again, the latest journal contains that, or within a week's time, my mail, there will be there in your mailbox. But to the audience, I'm not able to give that full answer. It is, there are 2 different criteria, which is, I don't know, that's 50 lakhs. It's not, it is turnover and like the MSME classification, capital and the turnover. So we have to see that.
So you can mail the answer and we'll mail it to all the participants here.
Great. Okay. Can you explain the treatment of difference in stock valuation under 145A of the IT Act and AS2? See, 145A of the Income Tax Act, as I understand, has been a grossing up of taxes on the stock valuation, and then also making a provision which was found to be tax neutral, to my understanding. A lot of thrust on that today, that is not much talked about. AS2, the provisions are very clear that cost on net realizable value, whichever is lower, and cost has to be, if in the valuation of work in progress and finished goods, it should be under absorption costing, which is, it should include an apportionment of indirect production overheads also, and not just direct costs. That is how I would explain the difference as. So probably from the GST point, the GST point is where you have asked this question. GST point, Dilip himself had asked this question, that if my input is eligible for credit, input credit, and my output is vatable, against which my input credit can be offset, or like if an exporter, then if the refund is possible, then that portion of the input credit or GST on inputs should not be part of the inventory valuation. Should be excluded from that. That's called exclusive method of GST. 145 is about grossing up the tax effect. That is understanding, but found to be tax neutral. Those are all the questions in the chat box. If there are, if they have been unmuted, questions can be shot directly also.
So we have given the option to unmute any of the participants. If they want, they can unmute and ask the question.
The participants, please use the opportunity to unmute yourself and ask your questions directly, please.
Jomon sir, good evening.
Yeah.
This is Prashant.
Yeah, Prashant, yes.
Sir, in the budget, there was a proposal regarding relaxing the one-person company.
There's a break in between, voice broke in between. What is the relaxation, Prashant?
The capital has to be enhanced to 2 crores and the turnover to 20 crores. Is
Yeah.
it true or is it still in the pipeline?
But that is for the small company definition.
Yes.
That has not been enacted to my knowledge.
Okay. And they have in the budget speech, the Honorable Finance Minister has told she is going to relax the provisions regarding one person.
OPC
So there will
is
not be any turnover criteria for.
turnover criteria for, again, your line is breaking. I think there's a connectivity issue.
Finance Minister has said she's going to dispense with the turnover criteria applicable to OPC.
As of now, it's not enacted to my knowledge. Companies I have to double check. But that change, I don't think, has become part of the law. It is only a proposal there.
Why I'm asking the specific question is now the sole proprietors are put into the disadvantage of having huge amount of surcharge if their income crosses a high level. So thinking about a tax planning angle of converting a sole proprietor to OPC.
Okay, from that angle, that requires, I think, little more application of time and thought. Offhand, I'm not able to answer.
Okay, sir. Thank you, sir.
Thank you.
It was a wonderful presentation.
One question had come in the chat box.
Yes, Rama.
Are you able to read it? What are the main differences between a finance?
Is it possible? Is it possible to prepare a table relating AS and SS, left-hand side AS and right side concerned SS to be followed to audit the respective AS? Please advise. Strictly speaking, that kind of one-to-one relating AS to SS may not be possible, and it's not really illogical also. I would say I did mention about AS 18 when we talk about AS 18. Related party disclosures, that is where I said I will refer to SA 550. That is related party standards and auditing. I can make an attempt, but I don't think it will be a say. For example, let's take one accounting standard valuation of inventories. Valuation of inventories, yes. SA 501, yeah, quickly I can relate. SA 501 states that the auditor should attend physical verification, either himself or through authorized empowered representative. That is possible. One-to-one is not really possible. Audit considerations. Let me attempt. Who has asked that question?
It's me, Padmanabhan.
Oh, Raman. Why do you ask these difficult questions at 5:30, 5:45? I always want to say only simple questions. So as a chairman for the, if there's a physical meetings, as a chairman for the session, I say simple questions I'll answer, difficult ones as a chairman. We will try, and we'll do it together and then share it with the members.
No, that will be
good thought. Like AS 18 and 550, I did mention. See, for example, AS 1, disclosure of accounting policies, which I said we look at. not really directly relatable. But AS1 disclosure of accounting policies.
For example, for all the AS, you can refer the documentation essays.
Yes.
So likewise, I think that will be a good thing for the beginners and also for the younger CAs who are very reluctant in following the accounting standards and essays. As you said in the initial thing, that is everything. Everybody talks about GST and income tax. Nobody talks about the essays. That is the most important thing which as a CA nowadays require.
Yeah, I know. Yeah, let me see. I think 230 is all to see. 230 is all pervasive standard. SA 500 evidence is all pervasive standard. SA 300 is all pervasive standard, which is planning. Every aspect of this has to be planned. So, but then there are certain standards which can be directly related. I'm getting the sense of it. So let me, and then I'll share with you. Then if we are able to collate it properly, then we'll share with the members.
Thank you.
Great, Padhu.
One question.
There's another question in the chat box. What are the main differences between a finance or banking company and a company engaged in manufacturing or trading while recognizing interest income under AS9?
Okay. AS9 is a manufacturing company. We used to call them non-trade investments. Manufacturing companies' primary business is not to invest or put deposits in the bank and earn money. So there, the consideration in AS9 is very clear, is that the revenue recognition has to be based on your fixed deposits, your investment debentures. So interest has to be a function of time, has to be recognized. That's very clear. Now, when it comes to a finance company or an NBFC for that matter, let us take a Muthoot for that, any of the red or the blue Muthoot, where they have interest earning loans and given to parties or see NBFCs and banks. When it comes to, there's a key issue that these are all overridden by, superseded by the IRAC norms, which is about true and fair. IRAC is income recognition and asset classification and provisioning norms. That is equally applicable for banks and NBFCs. So there, that has to be given due respect to. There, these principles of general revenue recognition is not the one which matters. It is the specific guidelines which are applicable to recognition of interest and related charges from various constituents to whom you have advanced money. This question was differently asked to NP Sarda, one of our very knowledgeable past presidents. That, sir, you're talking about NPS and you're saying that, okay, you will recognize revenue only when it is received. In the case of NPS, briefly said, it is saying that, okay, you will recognize revenue only when it is received. Is it not defeating accrual, which is one of the basic assumptions? It is not against accrual. Then he said, Are Baba, look here, accrual is an accounting assumption. What is paramount is true and fair. You forget about assumptions and all that. What is true and fair? When your principal itself is doubtful of recovery, how the hell should you think that you would debit more amount into that particular account, which is principal itself is bad and not recoverable? Then where do you credit it to? You credit it to your P&L as income, interest income, and then declare a profit and declare dividend out of that, which is again is a spirit of prudence and true and fair, and therefore accrual is not everything. So that is just an anecdote to your question. But the answer to your question is, in the case of a manufacturing company, yes, surplus. We also had the old Tutico and Alkali's case, to borrow a tax point also here, where this during the construction period or the gestation period, you have borrowed some money, you have some investment from shareholders, all those things, which is not immediately required for the application of the project. You deposit in the bank. Okay, you deposit in the bank, and some of them are bold enough to invest in mutual funds or in the capital market directly. So there, you say that you earn some income. What is the treatment of this income? From an accounting perspective, we always used to say that net it off from your pre-operative expenses and rest only to be capitalized. Net amount to be capitalized. The taxman said good accounting is not good law, and they wanted to tax that. That is that from a tax point of view. So there again, the recognition of interest is, yes, I put an FD on, let's say I put an FD, putting an FD to on 1st of Jan 21. I put 3 months. 3 months, yes, 3 months. My interest rate is 7. I put an amount of 1 crore on 1st Jan. So 1 crore to 7% is 7 lakhs into ease of calculation 3 by 12. That is the interest which is due. To that extent, I should take credit off. That is the income. That is the point I want to drive home. And the case of NBFCs, banks, it is overridden or superseded by the IRAC norms, which is given by Reserve Bank of India.
Jomon sir.
Yes.
Good evening. Excellent presentation.
Sony.
Yeah. I'm not able to attend the initial part.
You had a presentation today at Kannur,
yeah,
right?
it is over. It is over by 5 o'clock. Then I joined here.
Okay, very nice. Okay, good. Deposits today deposits.
Yeah, deposit.
Chapter 5 if I remember correctly, chapter 5 of Companies Act.
Yes, correct, sir.
Very nice. Good. Please, Sony, you have a question.
This is my general question regarding all this accounting policy and notes, etc. It is a duty of the management.
Yes.
We have to ensure that it is complied with, and we have to report that. Actually, in practice, instead of management, we auditors are preparing.
Yes.
Okay. And then sorry for that.
Please complete the question.
Okay. So any interest independence or interest threat will be there in such a case because the other side supposed to do that. Okay, that is one area. Then if the auditors are doing, we cannot build it separately. If we start some separate segment on preparation of this particular area on accounting standard, then it will be one more area for our members to serve the company, a specialist in accounting standard or something like that. Yes. This is just a thought.
No, it's a well-placed thought, but all of us agree here. It's not only in Kerala, you go to Chennai, Mumbai, London, New York, it is always the public accountants in US or chartered accountants in the Commonwealth countries that many of them are actively involved with the management in the preparation of financial statements for various reasons. One is that medium-sized companies may not have the resources to appoint a corporate accountant, in-house accountant, who can understand accounting standards, who can understand Schedule 3 and all that. This is an unfortunate part of it. So we help them, but the audit considerations should remain intact and should remain paramount and supreme over those supporting work that we do for them. That is something which, of course, if you ask me, strictly speaking, yes, there is a clash of interest. But then that I did mention about the students. അവരോട് ഓഡിറ്റ് കഴിഞ്ഞു എന്ന് ചോദിച്ചാൽ പറയും സ്റ്റേറ്റ്മെന്റ്സ് എടുത്തു സാറിന് പറയുന്ന ഒരു സാഹചര്യമുണ്ട്. Yeah, so that happens with all this theory. It happens sometimes in my firm also. I'm not denying that. We are not different. But then the point here is to know that, yes, even with all that, if there is an issue, for example, going concern, let them prepare the financial. If going concern is at stake, I think we should be bold enough. We are helping them, should not deter. They should be more supportive. And what happens if we are helping them too much? I didn't mention that. And on the part of the fees, see, there is a restriction already under 144. Multidisciplinary services that may not be in right day. So what we do is that whatever is packaged into the audit process, the fees has to be prefixed. So if there is tomorrow when Schedule 3, look at the new Schedule 3, we are discussing in our form. The new Schedule 3 compliances, who are going to do it? We'll have to put a lot of and then exams are getting postponed, students are on long leave, there are a lot of issues. So we have lived over all that. We've weathered this also. I'm an undying optimist from that angle. But the point here is that whatever is assess the work properly and tell them that a lot of work. We have communicated saying that the new reporting requirement, disclosure requirement. Don't say that financial statements preparation. Disclosure requirements are very, very detailed, and we have to. It will take a lot of time, and then therefore fees ask for a fees increase, and we should insist on that. I think that looks possible and doable.
Thank you, Jomon sir, for your enlightening thoughts.
Thank you, Sony.
Jomon sir.
Yes.
One doubt. Nidhi company
എനിക്ക് ആൾക്കാരെ ശബ്ദം കൊണ്ട് റെക്കഗ്നൈസ് ചെയ്യാൻ പറ്റുന്നുണ്ട് കേട്ടോ.
Nidhi company has filed NDH4, but MCA not yet approved the same.
ഇത് അക്കൗണ്ടിംഗ് സ്റ്റാൻഡേർഡിന്റെ സെഷനാണ് സാർ. എനിക്ക് നിധി കമ്പനി ഒന്നും പറഞ്ഞാൽ അറിയില്ല. ഇത് അക്കൗണ്ടിംഗ് സ്റ്റാൻഡേർഡ് ഇടയ്ക്ക് നമ്മൾ
അത് ഗോയിങ് കൺസേണിന്റെ ഒപ്പീനിയൻ നമ്മൾ എന്ത് പറയുന്നുള്ളതാണ് ഓഡിറ്റ് റിപ്പോർട്ടിൽ.
ഒന്നുകൂടെ പറഞ്ഞ നിധി കമ്പനിയുടെ ഫോം ഏതാ? NPS 4 അല്ലേ?
NBH 4. അപ്പം അത് അപ്രൂവ് ആകാത്തത് പത്രത്തിൽ പരസ്യം കൊടുത്തിട്ട് കളക്ടേഴ്സ് ഷട്ട് ഡൗൺ ചെയ്യാൻ പറഞ്ഞിട്ടുണ്ട് ചില നിധി കമ്പനികൾ.
ഓക്കെ മനസ്സിലായി. ഐ അണ്ടർസ്റ്റാൻഡ് ദാറ്റ് പർട്ടിക്കുലർ പോയിന്റ്. അത് എല്ലാരും ഹൈക്കോടതി പോയി ഇപ്പം അത് ഗോയിങ് കൺസേൺ പിടിക്കാൻ പറ്റത്തില്ല. ഗോയിങ് കൺസേൺ വെച്ചാൽ കംപ്ലൈന്റ് ആയിട്ട് വരുമ്പോൾ അതിന്റെ അകത്ത് പ്രശ്നം വരേണ്ട കാര്യമില്ല. ഗോയിങ് കൺസേൺ ആയിട്ട് എനിക്ക് തോന്നുന്നില്ല. They will have to take a collective view because so many of them have to be shut down. That's not going to really happen. And therefore major legal roadblocks essentially raises eyebrows when it comes to going concern consideration. I agree with you. You have a very valid point. I hope still we have 160 members. We are in agreement with Rajneesh saying that if the major legal roadblocks, for example, നമ്മൾ ഒരു പ്രോജക്ട് പ്ലാൻ ചെയ്തു, എല്ലാം ഇപ്പൊ DLF കൊച്ചിയിൽ ഒരു പ്രശ്നം ഉണ്ടായി. DLF പ്രശ്നം ഉണ്ടായി കഴിഞ്ഞപ്പം if you are saying that okay, this is not possible, കൺസ്ട്രക്ഷൻ നടക്കില്ല എന്ന് പറഞ്ഞ് നമ്മൾ ഒരു കോടി രൂപ ഇൻവെസ്റ്റ് ചെയ്ത സ്ഥലത്ത് കൺസ്ട്രക്ഷൻ ടോട്ടൽ ഗിവൺ നോട്ട് കംപ്ലീറ്റ് ബ്ലോക്കേജ് or corporation is not allowing us അവിടെ കൊണ്ട് സ്റ്റിക്കർ ഒട്ടിക്കുന്ന സാഹചര്യമാണെങ്കിൽ that becomes questionable. But this I don't think many of them. I've heard this, and some of our clients had this. Not our clients, friends had this issue. I don't have a Nidhi client, but we will. They can get over that, and the stay would be considered favorably because it is delay in compliance and it is not strictly non-compliance. That's a view I take, but debatable, open to debate.
Okay, sir. Thank you.
So there's another question in the chat box, but before that, CA Joseph Mathai had raised his hand some time back. So if you have a question, CA Joseph Mathai, sir, please ask the question. If you don't have,
yes, can I ask? We have 3 types of companies.
Yeah.
One is a larger, second is a smaller, medium. You said that all account standards are applicable in the case of large companies. But in other companies, not all are applicable.
Yeah. Yeah.
Give your answer.
That is what we had mentioned, that companies are categorized into 2 now. One is SMC. Sir, ആദ്യമോൽ ഉണ്ടായിരുന്നോ എനിക്ക് അറിയത്തില്ല. ചാർട്ട് ഉണ്ട്. I'll share that chart with you. ആ ചാർട്ടില് സ്മോൾ ആൻഡ് മീഡിയം കമ്പനീസിന് വിച്ച് ഓൾ സ്റ്റാൻഡേർഡ്സ് ടു വാട്ട് എക്സ്റ്റെന്റ് ആർ ആപ്ലിക്കബിൾ എന്നുള്ളത് ഞാനൊരു ചാർട്ട് ഫോമിലാക്കി. Which is easy reference for you, which will be Prashant, I think, will upload on Kottayam website also and circulate. അപ്പം അത് ബാക്കിയുള്ള ബിഗ് കമ്പനീസിന് എല്ലാം ആപ്ലിക്കബിൾ ആണ്. ഓൾ സ്റ്റാൻഡേർഡ്സ് ഇൻ എൻറ്റയറിറ്റി, ഒരു എക്സംഷനോ റിലാക്സേഷനോ ഇല്ല. SMC സ്മോൾ ആൻഡ് മീഡിയം കമ്പനിയുടെ ഒരു ഡെഫിനേഷൻ ഉണ്ട്. അതിന് വീഴുന്ന കമ്പനീസിനാണെങ്കിൽ കുറച്ച് സ്റ്റാൻഡേർഡ്സിനൊക്കെ റിലാക്സേഷൻ ഉണ്ട്. ഇപ്പൊ സെഗ്മെന്റ് റിപ്പോർട്ടിംഗ് വേണ്ട, അങ്ങനെയുള്ള സംഭവങ്ങളുണ്ട്. അത് ചാർട്ട് വരുമ്പോൾ സാറിന് ക്ലിയർ ആണ്. അത് റെഫറൻസ് പോയിന്റ് ആയിട്ട് എടുത്ത് വെച്ചാൽ ഞാൻ മെയിലിട്ടേക്കാം സാറിന്. Prashant will do it, but I will also.
Sir, one more question. One simple question.
Yeah.
From today's your lecture, I understood that these accounting standards are the most important contribution of the ICAI to the Indian society. That knowledge I got from your today's lecture.
Yeah. Thank you.
Am I correct?
Yes, nammal accounting standards formulation in our country, yes, that is done by the Institute Accounting Standards Board. So that is something which you have to be really proud of, and that is being adopted by the government. Though they talked about formulation by the central government, NFRA, and formulate cheyyunnonnilla. Our standards are being continued to be recommended. Adana. About Chairman, the call from Ongol. This call is a call from Ongol. Can you allow me to leave because I am supposed to inaugurate that?
Yes, sir.
No, sure, no problem.
Yes, sir.
Sir, I'm logging in 2 minutes. Just completed.
Friends, we have just one more question from Philippos Martin. We'll send it to Jomon sir and get his answer.
AS9 standard sales applicable to manufacturing and trading. For NBFCs, it's IRAC. Other Philippos sir, I'll speak to him personally. Sir, I have miss call at WhatsApp and the message at town. Separately, wait. Extremely sorry. Sabo, thank you, thank you, I'll wait.
Okay.
Sorry to interrupt, Dilip. I think Sabo is to propose what of thanks.
It's okay, sir.
Okay. Respected Chief Guest, CA Jalapathi, our most valuable speaker, CA Jomon K. George, Chairman, Managing Committee, and members of all the participating branches, good evening. It's my privilege to say a vote of thanks on this occasion. On behalf of the Managing Committee and all CA fraternity of the respective chapters, I extend a very hearty vote of thanks to CA Jalapathi sir, Chairman SIRC of ICAI, for blessing this occasion as the Chief Guest today. Thank you, sir, for your time and address. Now, let me extend my hearty vote of thanks to Speaker for your esteemed presence and for sharing your knowledge and opinions with us today. CA Jomon K. George, past Chairman and member SIRC of ICAI. Sir, I would also like to thank you for your moral support and guidance.
Thank you, sir.
Thanks.
I take this opportunity to express my vote of thanks to the Managing Committee of all the branches for conducting such a 3-day seminar on these relevant subjects. Hope we can do much together in future also. The most important part of any seminar is participation. Our heartfelt thanks to the members for your participation in this event. Jomon sir, I am not taking much time. Thank you all. Once again, stay safe.
Thank you so much.
Thank you,
off.
sir.
Thank you very much.
Thank you, sir.
Okay, sir.
Thank
No,
Yeah, bye.
Thank
Bye.
you. Bye.
Bye, sir.
Bye.
So that's the conclusion of session. If anyone have any doubts, you can mail to the branches. At the branch level, we'll take care that the questions are reaching the speaker for the day, and we'll try to circulate the answer as far as possible. So since the time have run,
Sir, one thing, the link will be the same for all the 3 days?
Same, sir. Same thing. Same thing.
Sir, some of the members has raised that they have not received the email, so that we can share the link, whether it is okay.
So the problem is that the email has been sent for registration. The email will be sent for registration. Once it has been completed and submitted, a confirmation mail will be sent from ICAI.
Yes.
So that confirmation mail has the link to join the meeting. They might be searching for the mail from the branch. I have been searching for the same. That is why I'm telling this.
Okay, I'll inform that one.
It will be from ICAI. The confirmation will be from ICAI.
So you may check as a submatter as confirmation. So you will get the link.
Okay. Thank you, sir. Thank you. That I will do that. Okay. Thank you. Bye, sir.
Okay.
Praveen, thank you. Dilip, sir.
Thank you, Rama.
Thank you, sir. Thank you, Rama, madam.
Thank you, Aryan, sir. Sabu, sir.
Dilip, sir. Thank you very much.
Thank you, sir.
Sabu, sir. Thank you.
I'll take my leave.
We'll meet tomorrow.
Sure.
We'll meet tomorrow.
Sure. Thank you all. Bye.